And perfect. So, yo, what up for y'all on the YouTube replay? I appreciate y'all. We're finally back, after a long day's work. I'm here to do some live streaming. So, look at this. We're actually at a new all-time high today. Today's a great day. We're up 0.6% in my portfolio, which when we combine both of our accounts, we're actually at a new all-time high. I'll show you my portfolio very quickly. Then we'll look at some of y'all's stocks. And I have a new interesting company I want to share with you. Google is up a massive 2%, new all-time high today. I've been telling everyone this is like such a great never sell stock. Even it might still even be worth buying at all-time highs, but not much of it. Again, none of this is financial advice, of course. But yeah, that's my Robinhood portfolio right there. And also our Roth IRA. I made some changes. I'll share with you that in a little bit. But also this account right here, my Moomoo account, where once I buy a stock in here, I try not ever sell it. I also hit a new all-time high today. I've never been over 23K. If you look in the top left there, so we're at 23,000. And check this out. Year to date, this is the crazy part. Year to date, we are up 48% on a return money weighted average basis, and that's mainly from Comfort Systems right here. They're up another 2.6% on the day, and we literally just bought all of our shares this year, and it's made us $4,000 this year. Another stock we bought all of our shares this year were Amphenol Group. That made us another nice amount, and then we've also here's another stock that hasn't been doing great, but we've been loading up on or dollar cost averaging into Coca-Cola stock. Yo, what up, Dissector? He said HITI. Yo, but look at that company right there. So, and then finally, I'll be very quick. We have our growthy portfolio. Hopefully, that did not show my password right there. And I believe Webull reports earnings today. But yeah, check this out. All time, we were only up 17%. All time. So this is my lowest performing portfolio, but this has a lot of the stocks you guys have probably heard of before, like kind of like my risk on account. Like I have Reddit, I have SoFi, AMD, Robinhood, Super Microcomputer, a lot of popular names and a lot of retail owns. I do have some big losers in here though. We're down bad on Zoom, UiPath, TAP hasn't been doing great. Progressive, I still think that's a nice value name right there. Ticker symbol PGR, Sprouts Farmers Market if you're looking for a little grocery store exposure. I think this one is at a really good valuation, not financial advice there, of course. But yeah, let's look at some of these stocks you guys got here. Yeah, if you got any stocks you want me to look at, let me know. Then I'll get back to my portfolio in a little bit. But someone said you what up? He said you missed out on HITI stocks. So I haven't heard of this company before. But if you look in the top right, here's what I really look at: the size. This whole entire company is only worth 290 million. So it's a very small company. So it looks like they're a brick and mortar store, and their sales are up 15%. I was about to say brick and morty. Oh my goodness. And then they also have some e-commerce revenue, not much. But look at that. All of their, or pretty much all the revenue comes from Canada. So just know that right there. So let's see. Are they profitable? So they're not making net income yet, but they're barely losing any money. So this one's interesting. I'd still be careful because they're a very small company, not really making any profits yet. Oh, they're Canadian. We're looking at Canadian revenue. So we have to switch it to USD. But sales are up 10%. That's good at least. So I can see why they've been doing decent. So yeah. Hey, Uber guy, what's up, dude? He said ULTY. Oh yeah, this is for if you're into the covered call ETFs. Here's the thing with these higher yielding products. Like, look at this. This IPO'd in 2024. So it was $20 and now it's $5. So I expect the trend of this to sadly just continue to go and go down. But why would you buy this? You're basically buying this to maximize your dividend income. It doesn't actually have 128% yield. As you know, whenever the price of a stock goes down, it makes the yield go up. So basically, you're not going to outperform the market in the long run with that ETF right there. But you basically buy it to maximize your income, not really expecting to outperform. I've never heard of this company. Someone said, "Have you ever looked at ICE?" And no, I actually haven't. I've never looked at this ticker symbol. Let's check it out. This is Intercontinental Exchange. They're a huge company. Wow, $101 billion company. Yeah, I hope y'all are having a great Thursday, by the way. Let's go see what they do. So that's actually interesting. So they're an exchange. I wonder if they're like a stock exchange or something. So that's up 17% year over year. Fixed income and data services, that's up 6. Mortgage technology. So I like how diversified that they are. 51% of the revenue comes from the US. So let's see. Revenue's up 12. Net income is up 35 though. So that's really good. So that means they're growing their net margins. 26% net margin. That's a all-time high record margin. It's never been above 26%. So that's incredible. Making billions of free cash flow, hundreds of millions in net income. I mean, that's incredible. I really like that name. And they have a 1% yield. Pretty nice. I do like that stock. So, um, have you? What's this one right here? So okay, we'll cover this one. This is Neo right here. This isn't really a company I'd recommend too much because the it's hard to trust this one, but I I'll just kinda explain this. I'll explain why. If you look in the top right, again, the whole company, the market cap is worth 14 billion. So we'll just kinda think about this easily. The whole company is worth 14 billion, and you're buying a company that loses just around 1 billion in net income a quarter. So it's pretty tough. I mean, look, 930 mil this quarter. Oh, they're also Chinese, but 980 in, but this is in USD. So basically, they're losing close to 1 billion a quarter. The trend isn't really getting better, and because of these huge net income losses, look what that's doing to their balance sheet. They now have the exact same amount of liabilities as assets when they used to have a lot more assets and liabilities. So these net income losses have to come from somewhere. So what they're also doing is diluting the shareholder while the stock's at all-time lows. So I think that one's tough to really trust in the long run, but we want to see those losses start to narrow. If you want to make that a meaningful position, it's always fun having a nice little fun position. Like I have those. I own SoFi, Super Micro, Reddit, but you don't want to have that as a meaningful position. And hey, what up, Dot? Thanks for the 3 roses. He said, "Can we look at UUU? Yeah, let's do it." And invested '09. Thanks for the dolphin. We'll look at what's that one? NU after this. That's that cool crypto bank. So here's Energy Fuels. This is basically a pure uranium play. So if you want exposure to uranium, this is one of the better plays. So yeah, look at that. 94% of the revenue comes from their uranium sales. That's where the revenue breaks down geographically. But yeah, it's basically a pure uranium play. And let me go to see what the sales are again. So okay, so they did have a nice little quarter here. The sales were only 4 million this quarter. They have a really monstrous balance sheet. Hold on, let me see. So they have $200 million of cash and zero debt. So actually 11% of their market cap is just their cash on hand with no debt. Pretty cool. Again, if you want exposure to uranium, also check out the ticker symbol URA ETF. Look at that one since 2019. It might even be doing better than the S&P 500. But when we scroll to the monthly, it doesn't look the same. But yeah, basically, my favorite uranium play is also ticker symbol CCO. I would pick CCO, then maybe UU. But anyway, let's keep going here. NU stock, yeah. What up, Invested Online? Let's do it. So NU, this is a kind of crypto play. So um, basically in South America, their currency is so bad that this company decided to open up a crypto bank, and it's been genius because down there in Brazil, currency's not good, so they use crypto to transact. That's really the market to be in because people don't really transact in the U.S. with Bitcoin or crypto, but in those other countries, that's where it's really popular, and they're expanding to other countries as well. But they print money. I mean, look at this right here. I mean, when we just judge this company from their financials, I mean, this is incredible, and this is in USD as well. It's up 31%. Also, Warren Buffett with Berkshire Hathaway does own a little stake in this. But these are incredible numbers. So I would recommend, again, not financial advice. That one's a good one to just buy and hold for the long run. I would see that. Yo, how many accounts do you have? Yeah, oh, yeah. Hey, Titus. No, hey, by the way, this is my only TikTok account. I'll never follow you, DM you. I don't sell anything. I have no course book. Yeah, I'll never follow you guys. So that's not me. No, Titus. Yeah. Oh, I should pull up the screenshot. There's like literally 10 accounts. If you look up Nathan Robert on TikTok, there's 10 accounts with the same name as me. This is my only account. I'll never follow you, DM you. Anyway, let's keep going then. So, what about Pricard Medical? It's gonna IPO. I haven't heard of that one. Hey, what up, Nathan? And you've been solid. Hey, nice, dude. So Eunice said IRE in stock. Yeah, so this is a company that I believe deserves to be close to this all-time high level. I mean, look at how they've been doing the past couple weeks here. And they're not just doing good for momentum, but they're doing good financially. And when they're doing good financially, it justifies the increase in stock price. And here's why they deserve to be doing this good and hitting these new all-time highs. I mean, look at these growth rates. The sales literally went from 54 million to 144 million after already growing 50% from the previous year. So basically in 2 years, sales went from 16 million a quarter to 144 million. And this growth rate, what's it going to be this time next year? And on this 144 mil of revenue, they made 25 mil in net income, 20 mil last quarter. So at this rate, they're going to be making net income every quarter, super growthy, fortress of a balance sheet. So these financials really tell me why they're at all-time highs. They deserve to be. Another company at all-time highs, I can't believe it. Comfort Systems, my largest holding. Um, just incredible day. New all-time high for me today. So great day. Hey, what up, William? He says Inno data got in around 45, thinking of getting back in. Oh, hey, So I actually do own that one. Here's a quick update on my Roth IRA, by the way. I only have 6 companies in here. My Roth, here's a full disclosure. We're only up 4% all time. We started it basically a year ago. But one of the stocks I do own in here that I've been kind of just holding on for a while is Innodata. So this is a smaller cap. They're worth around $1 billion. You know what? Let me go analyze them because I do own this one. I might be biased, but here's why I bought them. Another great company with great fundamentals that these great financials justify why they're going up so much. So I believe this one's worth getting exposure to with a very, very, very small position. But check this out. Look in the top right, this market cap. They're only worth 1.27 billion. If you kind of look in the top middle, you see that PE? They're only trading at 31 times net income, or actually it should be right here. So if we go to PE, so they're trading at 31 times net income. Here's why I think that's fair. Look at the growth of their main business. Their digital data solutions or a data labeling business, basically the same as Scale AI that Meta just acquired. The revenue's up 100%, and this is organic. Like they didn't acquire a company, and that's why the sales are up. This is organic sales growth, so that's up 100% year over year. They also have this little agility revenue right over here. But not only is the revenue growing, but the profits are. So look at this. They've made net income every single quarter the past year. This is phenomenal. They've also been fortifying their balance sheet. Here's what I mean. Look, a year ago, that liabilities were 57% of the total assets. Now they're only 34% after growing the assets. So they're making net income every quarter, incredible growth rates. The sales are super growthy. Let's see. Yes, sales are up 80% year over year after being up 65%. So that's why, in my opinion, I put this one on the watch list. And as much as I love them, they're kind of like SoFi, Robinhood. I can't have them as a meaningful size position in my portfolio. Again, I got 9 shares. Again, big whoop, it's $350, but that's where it's fun. You find these interesting companies and you just want to put a small position, kind of like with Robinhood or SoFi or Reddit, some of these other companies. I think they're going to be a winner. Not financial advice, of course. Hey, what up, Luffy? Oh yeah, hey, by the way, I'm on a brokerage right here. We buy stocks. It's in the link tree in my bio. Very first link there if you want to get it. Full disclosure there. It's affiliate link. Yeah, the financials are really good there, Nathan. What's up, dude? So Card Medical. Yeah, give me the ticker symbol and I can check that one out. So yeah, you know what? Nvidia just reported earnings. We gotta cover them. Bull is also earnings today. Hey, that'll be very fun to look at. So I won't be live then, but that'll be interesting. But anyway, here's Nvidia stock. They're only down 1.5%. So to be honest with you, that's like a typical day for Nvidia, down just 1%. It doesn't even look like they reported earnings. Let's see what they did. So they slightly beat on revenue, they beat on net income, and beat on EBIT. So it's actually a pretty good quarter. So sales were up 69%. I think the margins did fall a bit. Let's see. Yeah, so the net income was only up 26%. So one thing that is investors are focusing on is this net margin. So look at this. They used to have, 57, 55% margins. It fell to 25% to only a 42% net margin. So the net income still grew, but the margin did fall a bit. But nonetheless, the stock is still doing incredible. I think their automotive business didn't grow too much. It hasn't updated yet. Yeah, anyway, it was still a good quarter. Beat the analyst expectations. Monster balance sheet. They added another 60 billion to their buyback program. Well, I want to show you this as well for Nvidia. Last thing here, Nvidia has, I forgot to show this. They have a huge GPU market share. Of course, they have a 20% PC GPU market share, and since they make GPUs, it's genius for them to get into the data center business. Data centers need GPUs, and Nvidia just makes them themselves. So that's actually basically 90% of Nvidia's revenues from their data center business. Okay. Can you explain Nvidia being down? Yeah, it's probably that margin collapse there, Joe. But they're not down too much. I think. Hey, thanks, William. Yeah, I can't believe it. New all-time high today. Yeah, I'm thinking Comfort Systems right here. So, what about? Let's see. Ooh, Oracle. Yeah, we can look at Oracle. So this is that cloud play. So if you're looking for like a pure cloud service provider, uh, Oracle's a big one, and you get a nice yield. They might have the largest market share. I don't know. It might actually be AWS with the largest market share. But anyway, check this out right here. Here's the cool part about them. 85% of the revenue comes from their cloud and license business, and they just make a lot of net income. I mean, look at this. They're pretty much making, if you average it out here, over 3 billion of net income every single quarter. So Oracle's doing pretty good. What are the margins? 20% plus margins. So yeah, I do like Oracle. Okay. Um, okay. PMI. They are okay. Let's look at PMI. Someone's been saying, can we look at PMI stock? Oh, and then I have a stock I want to share with you guys. Hey, what up, big man? He says Fiverr moving up. Hey, I haven't looked at Fiverr in a long time. I used to own them. Okay, PMI stock. Or wait, did he say, okay, hold on here. PML or I? Okay, Picard Medical. Okay. Oh, so they're an IPO and they're aiming for a $290 million market cap. Interesting. So here's another very small company, very small micro cap. Well, not too small. Has anyone heard of Fiverr before? It's like that website where they say you used to buy stuff for $5 on there, but but anyway, they're only an $870 million company. And if we look at this, yeah, I owned them a long, long time ago. I didn't have much in them, but let's see how they're doing today. They were let's see how much cash they got. So 725 million of cash. Where's the total long-term debt? No long-term debt anymore. They just paid it all off. Okay. So they're making net income every quarter. No, so actually if you're this is one thing that's interesting me. So look at this. If we look at the operating profit, they're actually losing money every quarter, but the net income is positive. How is that possible? That comes because this is actually from interest. They're making so much interest on their cash that literally their interest from their cash on hand is making them look net income positive when the overall business is losing money. So that's very interesting. They have so much cash, they're making a bunch of interest. Actually, I can find the exact amount they're making in interest. Look at that. They're making basically 6 to 7 million of interest a quarter. So that math adds up. So they lost 2 million. You add 6 million to that, that's how you get 3.2 million of net income. The math works itself out. Not financial advice, but there you go. That company so hey, what up, Jaguar? No way. Thanks for all the roses there. I really appreciate you. Yeah, yeah, as y'all know, I just like really looking at the financials of a company. But someone's been saying SNDL. All right, let's do it, man. Um, is that Sundial or oh wait, hey, actually this is a company that is in a industry I can't really cover on this. So they're in the leaf industry and I can't really cover that. So yeah, they're a micro cap, but they have been look at that rally that they've experienced lately. So yeah, so that's what they sell. Are they making money? So yeah, hey, they made net income in the most recent quarter. Technically, a little bit of net income. But I wish I gave you more thoughts on them and talk about the industry more. But the industry is not allowed for me to talk about on TikTok. Someone said GTLB or what a Alexander. I didn't even see that OLA. Let me know if you're still here. I can look at OLA for you. So have you seen Rich Tech Robotics? Hey, nice. Um, so here's GitLab right here. This is an $8 billion company. They're up 4.5% on the day. I always thought this was GitHub for some reason. So this wasn't the company I originally thought it was, have a similar name. But this one's still pretty growthy. So let's see how they're doing. They did lose net income this quarter, but look at how the losses narrowed. They lost 34% less net income than they did the previous year. And come on, revenue. I want to see the revenue. There you go. So the revenue's up 27%. I might have to reset the app here. My Wi-Fi is fine, but sometimes anyway, revenue's up 27. Net income losses narrowed by 34. That's great. Margins are growing a bit, so nice. What's the most important stat? You kind of got to look at everything, kidder. You got to like blend all of the financials together to get a real most important opinion. So do SCLX, please. They burn money, but merger is coming. Let's see. So this is if you look at the top right, this is a very small company. They're worth $90 million, and they're at all. So their whole company's worth 90 million. Let's see. Do they have sales? So the sales are down by 40% year over year. No. Look at this debt right here. So the whole company's worth 90 million and they have three. Oh, that's not great. Yeah, let's see. So these liabilities are a problem. Let's see net income. So yeah, Hulk. This one I wouldn't even touch. This one. It doesn't even matter if there's a merger in the future. Whole companies were 90 million. They lost 44 million in the past 3 months. 26 million the quarter before. So you just can't trust that in my opinion. You gotta be so careful. Or just have very very small position or something. So yeah. Are you in the green today? Yeah, we're very green, my friend. I'll be really quick about this. My main account right here. Yeah, look at that. New intraday high. We're up 0.63%. New all-time high. New all-time high in this account today. I've never been over 23,000. And so that's great news. And then this account is not at an all-time high, but we're up 17% all the time. I just like being fully transparent, as you know, if you got any questions for me. I always like to answer all of them. How you been? You think you did look at the RV? Yay, applesauce. Good to see you, my friend. Let's do it. So he said RVLZ stock. Then we can look at RVLZ. There's no results for that. So fortunately, that's not a stock. Maybe the ticker symbol was different. So someone said the Trade Desk. So this is that TV advertising company. Any news? No news. But basically, they've been struggling. They gapped down on some not so great earnings. Earnings guidance. So here's what they did. They actually beat on every metric slightly, but they guided in for single digit growth the next year. So no investor wants to hear single digit growth. But look at this. The revenue's up 19 for this quarter though. There was also some bad news. The revenue's up 19, but the profits, the net income, are only up 6%. So that means the margin fell a little bit. They've also been seeing some increased competition from Amazon slash Roku partnership, and they lost Netflix as a partner. Netflix used to use them. So I have a scary feeling. Sorry, I'm drinking my water here. I have a scary feeling that I'm waiting for this to really go under 50. Like I'm just being careful. They're just on my watch. I'm heavily watching them, but I'm being careful. I don't know if it might be worth nibbling here, but not a meaningful size position yet. I have a scary feeling it might go 10-20% lower the coming months. Uh, so let's see. Yeah, I could be wrong. I hope I am. So let's see. The Intel. Okay, so yeah, I wouldn't even be talking about Intel if it weren't for the government stake. So the government stake is really a game changer for Intel. So, yeah, Intel secures major U.S. government deal. So, if y'all didn't know, the government literally bought 10% of Intel, and they announced a $100 billion U.S. semiconductor manufacturing investment. Basically, it's heavily subsidized by the U.S. government. They have a great partner now. So, if I go look at the financials, they're going to be terrible, but it's really the future you're buying here. But yeah, they have a huge market share already for PC GPUs. Oops, a 63% PC GPU market share, which is pretty good. But for right now, they burn money hand over fist. I mean, billions. I mean, they lost 17 billion that quarter, 3 billion this quarter, a billion last quarter. Free cash flows just as worse. But that's what I'd be careful with. But I think that they're worth looking into after the government stake deal because there's this rumor that like Intel's going to take market cap directly away from Taiwan Semiconductor as the US government might force US companies to manufacture or buy Intel chips and ban Taiwan Semi. There's a bunch of news on that. I don't know, but I think it's worth a small position, not a meaningful size position in Intel, but they're really interesting. All right, so let's see. RZ. Okay, let's keep going here. RZLV stock. So this is Resolve AI. I've never heard of this company before, but they're up 19% on the day. A very small company. They're only worth 900 million. I wonder if there was any specific news here. It doesn't look like it. No news on this stock. Maybe it's just momentum. Nice. So, do they have any revenue? So, for the full year 2020, they did 180,000 of revenue. So, they're a revenueless company. And so, and they lost 170 million that year. For right now, nothing's really blowing me away to really want to buy this one from a financial point of view, but it looks like a nice momentum stock. Well, I need some more quarters of actual revenue to give form a real opinion on that. So, Um, hmm. I'll try and see if I can find this one. Simmons. Okay, this is Simmons Electric. We have a Simmons Electric box at our house. And look at that, they're pretty much at an all-time high. This is not a US company, they're a European company, so we'll switch the currency to USD. So they're in smart infrastructure, health thinners or something, digital industries, mobility. So very diversified company, and they're making a lot of net income. Wow. Basically if you average it out there, they're pretty much making 3 billion in net income every quarter. Sales are growing, margins are growing. I mean, this looks great. I can see why you liked it. And even though they're at an all-time high, you get a 2.4% yield. That's really good. That's really good. Hey, see you later, applesauce. Have a great day. Yeah, we can look at Webull earnings too. Let's do it. So BULL. So if you're wondering what is BULL, that is this app right here, publicly traded. So they're just a broker, and I've given them a lot of fees. Uh, you know, w- buying and selling stocks, but here's their stock right here. And they just IPO'd a couple months ago. Here's one thing I found interesting. Revenue's up 32% year over year, nice revenue growth. The net income, and look at that. This is the part I like, that they're making that net income in the past 2 quarters. 13 mil this quarter, 11 million last quarter. We will also just release like new crypto products that people can buy, and that's supposed to bring future growth. They're getting onto it. So that'll be interesting. Oh, so they are Chinese and there's no estimates that we can look at yet. I'm sure there are estimates, but they're just not on here yet just because they're so new. But yeah, they report earnings today. So they're either going to go up or down a bunch today. So be careful if you buy them today because they're about to report earnings. Okay. Yeah, no problem, Zach. No problem. What up? Yeah, hey, real Moy. I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little software, I'm honestly in the link tree in my bio, first link there. Um, it's an affiliate link, full disclosure, or you can just type it into Google, just brokerage called Moomoo. So let's see. What stocks should we look at? What do you think of Bitcoin? Hey, we don't really talk about crypto on here, but man, I wish I owned Bitcoin. Is what I'm kind of saying. I mean, they're at 112,000. They've been a monster performer. Yeah, let's look at some of these other stocks. What is BILI? What's this one? Let's see. Uh, Billy. Okay. So the stock is the same price that it was back in 20. Same price as they were back in 2020. They're a Chinese company. They're worth $9.3 billion. So yeah, do beware. This is an ADR, so you have to pay some ADR fees. So we have to convert their currency from Chinese to USD. So let's wait for that to load in here. Yeah, sorry, my Wi-Fi's a little slow today. Let's see, active users. Oh, that's a cool little stat we get. They have daily active users of 109 million. So they have a lot of daily active users, 109 million. I don't know what they do, but revenue's up 21. So revenue's up 21%. Let's see net income right here. Good balance sheet. They made 30 million in net income this quarter. That's great news. So yeah, they've made net income every quarter for the past 4 quarters. So the fundamentals are headed in the right direction. The free cash flow looks great. Nice. I just be careful that they're trying to. Yeah, hey, thanks. Yeah, hey, Jaguar. Again, if you want to get this little broker I'm on, it's where you buy stocks and stuff. You can also track like super investors portfolio stuff. Again, it's in the link tree in my bio, the very first link there. Yeah, like Nancy Pelosi, for example, we can see all our holdings and new feature. You can like as you know, these are super investors by SEC law. They have to reveal all their trades, and you can like batch trade, follow them into that if you wanted. Anyway, that's kind of cool. And they have all the other super investors and stuff. But anyway, let's keep going here. Thoughts on NBY? They pay dividends. Yeah, Linktree in bio, first link there. Or you can just type it into Google. It's just a brokerage called Moomoo, but Linktree in my bio, first link. It's an affiliate link, so I appreciate that. But here we go. This is Nova Bay Pharmaceuticals. So I'm not even going to really talk about this stock. If you look in the top right, the whole company's worth $9 million. So that is a very small market cap. So yeah, we won't cover that. Yeah, hey, try not to spam there. Well, I'll try and get to all the stocks here. Let's see. Hey, what up, German? Good to see you, bro. Um, let's see. Oh, hey, TYG. Oh, yeah, we can look at Datadog too. So this is Tygo Energy. So yeah, 80, another very, very small one at all-time lows. I mean, these kind of stocks don't really interest me, but they're worth $90 million. Let's see if they have good financials. Oh, hey, that is great news, though. Well, it's kind of just recovering from what it was, but revenue's up 90%. We want to see them keep that trend up. They are still losing a bit of money, but not much. The trend's getting better. The liabilities are now the same as the assets. So it's we want to see this growth continue and them start to make some net income. But looks like they are slightly beating on all the analyst projections. So we want to it's just so small. It's hard to trust. But they are interesting. They're interesting, but very small company. I'll be careful with them. Oh yeah, here, let's look at Datadog right here. So this is a company, they're like a software cybersecurity name. On this day right here, they got added into the S&P 500. So if you own the S&P 500, um, they you technically own a little bit of this. And someone said, would you rather me watch on YouTube or TikTok? Hey, yeah, hey, if y'all don't know, the best way to support me is to watch a stream from YouTube. I'm trying to build up the YouTube channel. So my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I'm streaming on there. If you missed anything, you can also watch it on the replay. Like the stream is always there for if you want to replay it or miss anything. So yeah, link tree, you can just type into YouTube Nathan Robert if you want to watch the stream from there. Really appreciate that. By the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. So anyway, here's Datadog. I like them. Their cybersecurity play. The revenue has been growing very nice. I mean, look at this. Look at these year-over-year growth rates. It literally just grows 20, 30% every year, every quarter. I mean, it just continues to hit a new record. Not only is the revenue growing, but actually, I didn't know this. The net income is falling a bit. So, oh wow, the net income was only 3 million the most recent quarter. Actually, they lost money. So, I there's something going on with the profits, but that might be why the stock has been flat for a while. But we want to see them really trend toward consistent net income profitability. Um, let's check out and see what Nancy Pelosi owns. Yeah, here, I'll be really quick about this. Here's the Nancy Pelosi portfolio. It sorts it by the top. So her top holdings are at the top here. She owns Apple, Amazon, Google, Microsoft, Nvidia, Netflix, CrowdStrike, Visa, Palo Alto Network. Those are her top holdings in order. Pretty cool. So let's see here. Yeah, we can't cover some of the. We can't cover SBET. Let's see. I bought 100 shares of Webull last week stock. Oh, hey, good luck. Hey, they report earnings today, couple hours. So today will be fun for you. What is OnDAS? Let's see. Someone said thoughts on ONDS stocks. So look at them the past couple days. I mean, or past couple weeks here. I mean, they have been on an absolute monster of a rally. They're up 15% just today. Uh, they're a Ondas Automotive System, so they must be like an autonomy car driving software. The revenue is expected to like double and triple. I mean, it's going from 4 million to 9 million. So looks like the revenue is expected to just keep on growing. That's very interesting. They've been fortifying their balance sheet as well. I wonder if it's from stock issuance or something, but they're interesting. I'd still be careful because they're a very small market cap. But oh, here's a really cool. Or actually, let's look at this one first. TRMD. Then we can look at Palantir. Man, Palantir is a very interesting company. So this is Torm. I've actually never heard of this stock before. So let's check them out though. So, um, hmm. They haven't been doing too great. Let's see what they do. Tanker segment. Oh, so they might be like an overseas shipping company. So yeah, 60% of the revenue comes from the UK, then Switzerland, then the US. So it's really an international play here. But yeah, look at this. Whenever there's supply chain logistics issues, this company really benefits. But for right now, it looks like the business is doing too great. The lifeblood of the company, the sales are down 30% year over year, and the profits are down 60. So the margins are falling even more. Dang, look at that. They used to have 40% margins and it fell to 18. So that's kind of why it explains why the stock went from 37 to 20. But if we get more supply chain, they're still making that income every quarter. What's the yield here? Oh, wow. So yeah, look at that. They have a 19% dividend yield. But here's the scary thing. So look at this in the most recent quarter. They made 58 million in net income. Here's a quick little test. Let's see how much the dividend cost. So they made 58 million in net income this quarter. The dividend cost 97 million. So, or maybe the dividend changes every quarter. Who knows? But I'd be careful with them. But at least they're one of the. I know Zim is like another stock sort of like that. Zim shipping have a huge dividend as well. So let's look at Palantir right here. So yeah, man, I love Palantir. I want to get exposure to this stock, but it's never been at a valuation that I'm happy with paying. Um, it wasn't. I wasn't happy paying for this valuation at 130. So it might just forever always be at a very high premium. I mean, they traded 107 times revenue. Not times profit, but 107 times revenue. But look at this. Look how growthy they are. I mean, 55% of the revenue comes from the government, and look at how growthy the government revenue is. It's at a new record, up 49% from the previous year. That is incredible growth on the government revenue. Also, the commercial business, like with S&P 500 companies, is up 50% year over year. So both main segments of business on Palantir are growing like crazy. A lot of police stations use Palantir Software, and look at the revenue. They had their first ever $1 billion revenue quarter, up 48%, very good. But the revenue was a billion, and the net income, the profits on that were 330 million. So nice little profitability there, and net margin growth, 33% net margins. They also have a fortress of a balance sheet. They have no debt whatsoever, and $6 billion of cash, up from 4 billion the same time last year. So anyway, Palantir is amazing fundamentals, but the valuation's too high for me to pay. But it's a great company. I'm on my way to own 5,000 shares of Palantir. Dang, nice, German. They're great. So someone said, hey, yeah, we just looked at Weeble. So well, out of respect, well, give me a minute and we can look at them later. But Johnny said thoughts on DCTH. This company right here, I do own, by the way. So check this out, by the way, full disclosure. Wait, how are we doing real quick? We're up 0.65% in there, and we're up 0.7% in here today. This is my Roth IRA right here. It's only $1,900, but one of the stock we own in here is Delcath Systems. It's my smallest holding. Keep in mind, I only own $150 of the stock. I normally don't even talk about these kind of companies because look at this stock. They're down 100% all time. They're only worth, let's see, $380 million. I never normally cover these kind of stocks, but here's why I own this one, and I only own $100 of it. So if you're like, if this one looks interesting, you cannot make this as a meaningful position in your portfolio. But here's why it's worth paying, I think, this valuation. So remember, the whole company is worth $380 million. They literally have $81 million of cash with no debt. So they're debt free, $81 million of cash, super growthy. The sales are up 200, or they're up 3x to 25 million. Sales are at a record, and they made net income on that. 3 million net income this quarter, 1 mil last quarter. So at this growth rate, they're going to be making a couple million every quarter from now on with 80 million in cash, no debt. They sell this Haptezo liver kit, and that's what's driving a lot of the sales growth. But out of all the $380 million market cap companies, I'm liking that one. And as much as I like them, again, I only own $100 of them. So, yeah. All right. Hey, what up? Shiny said Palantir is a sketchy business model. Yeah, I heard they're working with ICE and stuff or something. But let's see. I finally broke down about Palantir last week at 145 a share. Oh, hey, nice, William. So yeah, that's my thoughts on Johnny on DCTH. So someone said APLD. Hey, you know what? This is actually a stock owned by Nvidia. So if we go to the Nvidia portfolio right here, again, Nvidia is so big that they literally own some individual companies and stuff. All they did was basically add more CoreWeave. But one of the stocks they've just owned for a long time is APLD. It's 5% of their entire portfolio. They brought them into the Apple ecosystem. They've gotten them a bunch of partners. It was so beneficial. Nvidia took a stake in APLD. They got them a huge partnership with CoreWeave. That was really this huge gap up right here. They gap up on the CoreWeave acquisition, confirm the guidance after this quarter right here. So yeah, APLD is just going to get a good spot. I wouldn't normally just own a company because Nvidia owns it. Like we write again, that one's trash. But and Nebius is interesting as well. Mary just said Nebius. Since we're on the Nvidia portfolio, I got you, Mary. Let's look at Nebius right here. So again, just because Nvidia owns a stock doesn't mean you should. But here's you got to go do your own research on the company. When we go do our own research on Nebius, I mean, this is so cool. I mean, look at the growth here. What other company can pull this off? I mean, the revenue literally went from 14 million to 105 million. That's over a 7x increase in sales in just a year. And they have this fortress of a balance sheet. So Nebius, they're owned by Nvidia. They're super growthy. They're interesting, very interesting. I can see why they're doing so good. So someone said, yo, what up, New York? He said, what about TIC stock? So I haven't heard of this one before. This is Acuren. So a $2.22 billion company. Hey, yeah, if y'all are enjoying the stream, yeah, thanks. Yeah, hit the like button. I appreciate that. So, okay. Again, they just IPO'd, so there's not too much data here, but we can kind of see the revenue went from last quarter 230. We don't even get the year-over-year numbers yet. So, are they making net income? They barely lost any money this quarter, so I just need more history behind this company. Looks like, yeah, there's just not that much data right here. Specialty business service, Sorry, I wish I'd give you more thoughts on them. And hey, what up, Moda? How's it going? So someone said UPS right here. So this one I might It might be a dividend trap. And here's how we can tell if a company's a dividend trap. So, first off, when most people look at this stock, they're like, wow, I get a 7.5% yield. I mean, that's really what the S&P 500 on average CAGRs a year. You're supposed to get 8% of your money back a year with the S&P 500. You're basically getting 90% of that just in a dividend with this company. But look at the stock price. Here's why I think the dividend is at risk for UPS. And it might actually be healthy for them to cut their dividend. Their average daily parcel volume was kind of down bad year over year. But look at this right here. So the lifeblood, the sales of the business are down 3. But the worst part about this company is the fact that they didn't afford the dividend in the past 2 quarters. So look at this. They made 1.28 billion of net income this quarter. Kind of remember that they made 1.28 and the dividend cost 1.35. So they at very least minimum need to make 1.35 billion in net income just to afford the dividend. In the past 2 quarters, they couldn't afford that. So even though they made net income, they technically had no leftover profits for the company. They didn't retain any of it. They paid over 100% of their net income in dividends. So it's tough, and that's why that one's been struggling. Unless they recover soon, that net income, I mean, that dividend might actually have to be cut, and it might actually be healthy for them to cut the dividend, just like AT&T did. AT&T cut the dividend, and then the stock went up a bunch. Anyway, someone said Novo Nordisk. Hey, this is that weight loss prescription company. So if you've heard of Ozempic, if you heard of Wegovy, Elon Musk is on Ozempic. This is the company that owns it. So if you look right here, 93% of the revenue comes from their obesity care products. So pure weight loss play here. And look at how growthy they are. Sales are up 24, net income's up 45. So that means they're expanding their net margins, huge, 35% net margins, but they're pretty much making 4.2 billion in net income a quarter. You get over a 3% dividend with this company. So they're very interesting. But one thing that's really been weighing on the stock is the fact that they lose the exclusivity of their weight loss Ozempic patent in a couple years. So the future growth was pricing in to be lower, but for right now, the business is booming. I mean, they're still printing They did miss on net income this quarter, but they're still printing money for now. And I think they're worth looking into. I think they might have overly priced in how bad it's going to be. So someone said, all right, let's see. RAY. What is RAY? Raytech Holdings. Yeah, we don't really like to cover these kind of stocks. If you look in the top right, they're only worth 30 million. So, I mean, it's kind of like I ask myself, like, how do you trust a company like this? First off, it's a Hong Kong company. They're worth 30 million. It's not the end of the world. At least they're making money. Like for the full year, or they do it in fiscal year. I don't like when companies do this, but for the fiscal year 2025, they made 1 million of net income, which hasn't really improved too much since 2022. Basically, it's just a tough business. They're not really. They're a hair styling series, trimmer series. Anyway, I don't know about that one. I'll be careful. So, okay, WU, he said high yield, low payout, insider buying, low PE. Let's check it out. So this is the Western Union. Haven't heard of this company before, but dang, look, that's not great. The stock is at an all-time low. So as you know, whenever the stock goes down, the yield goes up. Let's see what the yield is. So an 11% dividend yield, a 34% payout ratio. Let's see. So consumer money transfer. So that the business isn't really growing. That might be one. Oh, hey, actually look at that. So they're 86% of the business, this part of it isn't really growing much. It's down 10% year over year. Like look at this. It's lower. It kind of just trends down every year since 2018. So that business is declining. But look at the consumer services. Ooh, well, it's still recovering from the 2018 level, but year over year it's up 40%. So I guess it has some easy comps there. Let's see. So let's see if their dividend is safe on this company. So I wonder if it'll show us that. It might not. But anyway, for right now, they're making 100 million plus in net income a quarter. Bro, okay, so yeah, they're making over 100 million in net income a quarter. Let's see how much the dividend costs. Yeah, the dividend cost 80 million. So the dividend is safe. So it's interesting. Yeah. I feel like they shouldn't be doing as bad as they have been. Thoughts on Lulu? Oh yeah, hey, Lululemon stock. Some of these apparel names have really been struggling recently. Like, yeah, look at that. Lululemon's the same price as they were back in 2019. So the stock's been flat for 5 years. They gapped down on earnings and then they continued to bleed. I mean, they gapped down, fell for another 10 days, and are continuing to bleed. I think it's overdone. I think it's worth like looking into. But again, I don't really this company I don't really expect to like outperform the S&P 500 in the long run. But here's one reason the stock's been struggling. They're losing their margins a bit. Like, kind of think about this logically here. The total sales, the revenue of the company was up 7.3. So sales are up by 7.3, but their actual profits, the net income is down by 2%. So what does that mean? That means they're losing their margins. Margins fell by 9%. Not the end of the world. They're still printing money, 400 or 500 million in net income a quarter. And here's the best part about Lululemon, in my opinion. What is Lululemon doing with all that leftover net income because they don't pay a dividend? Well, they're literally spending hundreds of millions of dollars solely buying back their own stock. So here's what that does for you as a shareholder. If you take anything away, this is really cool. Because check this out, the net income is down by 2. So net income's down by 2, but net income per share is up by 2%. So they've bought back 5% of the entire shares year over year. Pretty cool. So anyway, let's keep going here. Someone just said in the chat, I just bought 100 shares of BLNK stock. Let's check it out. BLNK. So, oh, Blink charging. No. Hey, so I'd be careful with this one. At least it's not too much money, but I feel like this company, in my opinion, it might be a zero, might be going to zero. So if you look in the top right, the whole company's worth 125 million. So remember, the whole company's worth 125 million. You're buying into a business that's losing 32 mil this quarter, 20 mil last quarter, 75 mil this quarter. They literally have lost more than their entire market cap just in net income in the past year. Oh, and look what that's doing to the balance sheet. No. So the assets have collapsed. These net income losses gotta come out of somewhere, and it's coming out of the balance sheet. They're also diluting you. So I just, if you're looking for a high quality company, that is just not a high quality company I trust to buy and hold for the long run. Again, not financial advice. I'm not an expert, but yeah. Someone said waste management. It says, but no, hey, no, this is not crypto. Uh, so waste management, it's kind of a boring name, but they're like the safest stock out there. So yeah, if you're looking, yeah, sorry, my Wi-Fi is a little slow right now. By the way, if you want to hit the follow button, we go live every single day, twice a day. There we go. So, geez, here's waste management. This company just compounds at like 7% a year. So, and Bill Gates owns a bunch of this stock as well. Let me see if we go to shareholders. Yeah, Bill and Melinda Gates Foundation owns 8% of all the shares of waste management, and they print money. I mean, trash, people always are going to need to throw away their trash. They're making 700, 800 million in net income a quarter. You get a nice 1.5% dividend yield. Let me see, are they doing share buybacks? No, they're not doing any share buybacks. But anyway, they have just such a great business model. I mean, no real competitors. I mean, Republic Service and Waste Management own like most of the market. They have a lot of pricing power. So someone Nexus said SoundHound. Yeah, hey, so this is SoundHound AI. If you're a shareholder of this company, there's really one financial metric you want to watch here that really moves the stock. And I'll show you that here. So I want to buy CRM before earnings. Oh, hey, when does CRM report earnings? So here's the thing for SoundHound AI. You want to focus on one thing only, and that's the subscription revenue. And check out, which is 75% of the revenue, or 75% of the whole business. Look at how growthy it is. I mean, literally a year ago, this business was nothing. It was a couple 100,000 of revenue a quarter. Now in the most recent quarter, it's 32 million. I mean, look at these year-over-year growth rates. That's what you really want to focus on. I mean, the revenue is up 781% year-over-year, literally to a new record. So incredible growth in their subscription business. How about the royalties? Down, or it's up 8%, not bad. But yeah, that's what you're really watching there, the subscription revenue, and they had a huge beat on revenue. Analysts expected 32 mil, they reported 42, so they're really interesting, and that's what you really want to watch there. Oh yeah, hey Toby, by the way, yeah, hey, I'm on a brokerage right here where you buy stocks and stuff, so yeah, if you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. Or you can just type it into Google, it's just a broker called Moomoo. So anyway, here's someone said Mercutio, PGY. So let's see, what is PGY? I don't think I've heard of this company before. So Pagaya Technologies. So they're up 9% of the day. Look at them on the weekly chart. They've been having a nice rally. They're worth $3 billion now. So actually, they have a pretty good market cap. What are the sales here? So the revenue's up 31% year over year. And it looks like they finally made net income. So if we zoom out here, look at that. They used to burn money hand over fist. Now they made 16 mil this quarter, 3 mil last quarter. So they're finally making some real profits. That's great news. I think that might be why there's some enthusiasm around the stock. And they're kind of a high momentum name. They're up 9.3%. So I wonder what they do exactly. They're in software infrastructure, AI. Oh, interesting. Hey, what up, Chris Sang? How's it going, Brand? Oh, yeah, hope y'all are having a great Thursday, by the way. So someone said, "Oh, Grab Holdings. This is a very cool stock right here." And this stock is basically Uber, but all around the world. It's basically international Uber. So check this out. They do delivery. They literally do ride shares. Exact same thing as Uber, but in all these other countries. Look at that. Malaysia, Indonesia. Notice the US and Canada aren't on here. It's like a pure international play. And guess what? They've gotten so much attention that Uber decided to buy them. This was kind of recent, like a couple months ago. Uber is now the largest shareholder. They own 13% of all the shares. So that was genius for Uber, by the way. They now have instant international diversification and they're really growthy. I mean, sales are up 24. They're now making net income every quarter. The free cash flow is just crazy. So Grab Holdings, I really like them. Uh, and you can get exposure just to Uber. I also love Uber stock. I think that one's just going to be a winner in the long run to just buy and hold for the long run. So, yeah, let's see here. Yeah, hey, ready. Let's look at Salesforce right here. So Salesforce, they report earnings on September 3rd. So next week. So next week we get Salesforce earnings. A lot of the software names have been getting crushed. You look at Adobe, like Workday, ServiceNow, a lot of these, Salesforce, of course, a lot of these service names have been not performing too well. Salesforce is the same price that it was back in 2020. So they've been flat for 5 years, but let's see how they're doing. I love how diversified that they are. I love their assets. I mean, they own Slack. I mean, so look at this. Their service, they're number one for CRM market share. They're in sales, platform, and other integration and analytics right here, and they print free cash flow. But I think investors were a little disappointed of the slowing growth, and the AI thesis is kind of hurting them, like AI will replace them. But look at the free cash flow. It only grew by 3.5%. So it grew, year over year comps were only up 3%, and the actual net income, after tax net income was only up by 0.5%. So that means the margins did fall a little bit year over year, but it's not the end of the world. Also investors, just from the law of big numbers, this company is basically just going to grow at 7% for the rest of the time with no M&A. And they have been doing a bunch of M&A. Salesforce just bought INFA. So all like this company, that's the reason why the stock looks so flat like that. If you ever see a chart like this, that means the company got bought out. So all of this revenue right here is now going to go to Salesforce. 400 mil of revenue a quarter is now added to Salesforce. It's going to add more inorganic growth. But I like Salesforce. I think they're going to be a winner in the long run. But I'd be careful. Pretty new to stocks. Just opened my Roth IRA. What are some? Yeah, that's awesome, man. Your future self will thank you for opening a Roth IRA. Yeah, hey, again, not financial advice, but just buy great companies you use. Here's some of the stocks that I own. Companies that we have all heard of and used. Meta, Google, McDonald's, Constellation Energy. We have our gas utility bill through Constellation Energy. I own Amazon. Right here, I got Amazon shares, Coca-Cola. So all those names, not financial advice, of course, but on this channel, we really stay away from like the very, very small micro caps that burn money and are super volatile. I don't really do options. I don't do crypto. We're kind of a niche, little kind of talk about some niche stuff. We look at the great fundamental companies that they're going to be winners in the long run. That'll hopefully outperform the S&P's 8% CAGR. By the way, I sell nothing. I have no course, book, Discord, WhatsApp. Watch out for people impersonating me. I'll never follow you or DM you or anything. But let's keep going here. Someone said, can we look at what Lil said, OPAD stock? Let's check it out. So, Offer Pad Solutions. Yeah, again, A very, very small company. They're only worth $160 million. And a lot of that market cap came just from today because the stock is up 50% today. I wonder if there's any like specific news. Um, maybe maybe I can go check the intelligent comments here. I don't know. But let's see what they do. So cash offer. So, so the revenue's down 36% year over year. The assets have plummeted by like 40%. They're losing net income every quarter, but it's not the end of the world. To be honest with you, nothing's blowing me away here, but there's some news I'm clearly missing there. So someone said PSKY. What's this one? Oh, and then we can look at Meta too. I love Meta. Oh, and Google. Hey, what up, John? What's up, brother? Good to see you, man. So this is the Paramount Skydance merger. So basically, Paramount, the streaming service, finally merged with Skydance or whatever, and that's kind of why they candlesticked up this day. Let's see. Their original TV media business isn't growing. Kind of like Comcast or Disney. Their TV media business, like all of them, aren't really growing. But a lot of the growth factors for these businesses are the DTC streaming businesses, like the streaming services. So this is Paramount Plus. It's up 15% year over year. So that's some pretty nice growth, and it's usually higher margin than probably the TV media. But anyway, that's that business. My side of the bet is if I want a streaming business play, I really like Disney. I mean, they own ESPN, they own Hulu, Disney Plus, of course. They just got NFL, NBA, or MLB rights. Anyway, Disney's also has not been a great performer. Disney's the same price that it was back in 2015. Jeez, that's a decade ago. But I still own them. So, okay, let's look at Meta right here. Hey, what up, Agent? So, I really think it'll blow up in the next decade. Yeah, what stock you were talking about there, Agent? Let me know. So, actually, let's look at Google right here. So, check this out. Yeah, congratulations to every single shareholder of Google. This is one I've always been saying, forever, that this is a great never sell stock, and they're at all-time highs today. So, check this out right here. Here's why I think they might just continue to keep on hitting new all-time highs. I mean, look at this PE. That's the net income multiple. They're trading at 22 times net income. That's below industry average. And this is a Mag 7 company. This is Google. I mean, they own Android, they own YouTube, they own the cloud business, which just got a $10 billion deal with Meta. Waymo, they're in quantum chips. I mean, the surge, it's huge. And look at this, they're also a huge margin expansion story here on Google. Revenue's up by 13, but net income is up by 19. So that means they're growing their net margins. But if you're wondering why does Google just keep hitting new all-time highs, check out this net income right here. They made 28 billion of net income. And what is Google doing with 28 billion in net income? Well, they're spending 15 billion of it on share buybacks every quarter. So here's what that does for you. So again, the net income's up by 19, but the net income per share is up by 22.2. So you literally own 3.3% more of the company than you did a year ago. I mean, I just love these share buyback companies. So yeah, let's look at DIH said Pepsi stock. Let's check out Pepsi right here. So, I love a lot of Pepsi brands. I mean, they own I love the Frito-Lay business. There's so many. They own Cheetos, Doritos, they own Gatorade. So let's see how they're doing. The revenue. So here's the one thing concerning, they're not growing too much. Like the total sales of Pepsi are only up 1%. So the sales are up by 1, and the net income actually fell by 9. There was a little one-time adjustment this quarter. It wasn't actually this low, but the net income fell by 9.9%. So the margins did fall a bit, but still, this is a great company. Their dividend safe. They have a 3.75% dividend yield. That's a very great yield. So, but I think because of just the slowing growth, that's why they're the same price as they were back in 2020. But they're a nice yield play. Brother, and can I get your thoughts on CELC stocks? So, Solucity. So that'll send a stock up. So look at that. They just got FDA approval for one of their products. Are they revenueless? So yeah, look at that. Before today, they're a revenueless company. They have no sales. And what was the news that made them go up so much is the fact that they're finally now going to be able to have some sales. They just got FDA approval. So the future looks bright for them. It's kind of tough, buying them here after they're up 9%. But congrats if you own that one. I can see why they're up so much on that FDA approval. So, oh, what up? RT said IBKR. So, Interactive Brokers. Yeah. So, this company is now the same market cap as Robinhood, which is crazy to say. I mean, it's crazy to say that Robinhood's the same market cap as this company. So, Interactive Brokers. Yeah, they're just a brokerage right here. Here's their daily active trades, the darts brokerage accounts. They have 3.87 million. So, brokerages make their money from interest income and then commissions. And their interest income, it's up 3% year over year, not bad, and the commissions are up 27%. Very nice growth on the commissions revenue. And let's look at their actual net income though. So let's see, net income. Yeah, wow, look at that. A billion this quarter. It's pretty much going to be a billion in net income plus every single quarter. That's incredible profits. I mean, 40% net margins. I mean, they're a $100 billion company with 40% net margins. It's actually the same as Robinhood. Robinhood also has 40% margins. So the brokerage business is a great one to be in right now. I believe Nancy Pelosi also you know, shisty Nancy Pelosi also owns some of that stock. They got to make all their trades public by SEC law, and I'm pretty sure she owns like a little amount of that. So yeah. All right. So how to invest in Subway? Subway is not public, so you can't invest in them, but you can invest in McDonald's. They're great with Chipotle's public. But anyway, here's the SMH, the semiconductor ETF. So if you're like, I see Nvidia, I see AMD, Broadcom, I don't really know which one to buy. Well, you can buy this ETF right here, where you just get a little bit exposure to all of them. It's just it's a pure play just for the whole sector. It's a safer play than maybe just buying one individually. So yeah, look, 22. If you put $100 in here, $22 of that goes to Nvidia, 11 to Taiwan Semi, 9 to Broadcom, then AMD, Lam Research, ASML, Qualcomm. So yeah, it's basically a semiconductor play right there. Pretty cool. Yeah, no problem, John. So yeah. All right. Open Door. Yeah, so Open Door, this one's been a huge pure momentum play basically. I'd be careful with this one, basically they went up like on this they're a huge momentum play hoping for a lower interest rate environment. So, uh what does this company do? Simply, they just flip houses, and it's tough right now. But when we go back to a low interest rate environment, like in 2022, 2021, they were printed money. I mean, making 4 or 5 billion of revenue a quarter. Well, now since it's the high rates, they only did 1.5 billion of revenue. So this company's begging for a low interest rate environment. They're still losing net income every quarter, but the trend did get slightly better this quarter. But I'm just staying away from all that right now. I mean, yeah, but there's still definitely money to be made on that one. So, all right. Yeah, hey, I'll pull up BULL again. So, yeah, this company right here reports earnings today. And remember how we just looked at Interactive Brokers? This is another broker right here, brokerage right here. So, this is Webull. This is their brokerage right here. And this is their stock. So, let's see how. Yeah, again, they're Chinese. They just IPO'd just like 6 months ago. But the little bit of revenue, the data we do get is good. I mean, the revenue's up 31%. And look at that. They did make net income the past 2 quarters, 12 mil this quarter, 10 mil last quarter. So we want to see them continue to keep on making net income. So yeah, basically, I wouldn't buy this one today unless you're betting on earnings. So basically, after today at 4 p.m., they're either going to go up or down a bunch. And I'm very curious to see what happens with their earnings. I know they might give some good guidance because I know Webull literally just today or yesterday, the day before, just announced you can buy crypto on here, and that might be a huge earnings tailwind. But yeah, in my side of the bet, I own Robinhood and FUTU stock. They do the exact same thing as Webull, but I think they just have better financials than Webull for now. And Webull has a bit of a complicated share structure. I was still scratching my head around, but is investing Coca-Cola relevant today? Hey, I have exposure to Coca-Cola, but actually this is not the same one that you think. This is Coca-Cola Consolidated. So this is the bottling company. They're only worth like $9 billion. But I actually also just love the normal Coca-Cola stock as a dividend play. And that's that's a Buffett approved message. Because again, if we go back to the super investor watch list right here, Warren Buffett, oh my goodness, come on, Wi-Fi. Warren Buffett, again, has to make all his trades public. His fourth largest holding is in Coca-Cola. 9.3% of his portfolio is just in Coca-Cola. And that's what I find very interesting. And it's, of course, a nice dividend play. You get a 2.91% dividend yield. So basically, you get 3% of your money back every year in a dividend, not including the stock price appreciation because they do grow like 4 or 5% in stock price a year on average. So yeah, they're very consistent. Basically making a couple billion, 2 to 3 billion net income a quarter, nice yield. But yeah, I don't really expect Coca-Cola to outperform the market in the long run. But again, what you do get is the nice yield and slow but steady stock price appreciation. How do you get to? Yeah, hey, by the way, I'm on a brokerage right here where you buy stocks and stuff. Yeah, if you want to get this, it's in the link tree in my bio. That very first link there. Yeah, there's the Pelosi tracker as well. And what's cool is you can like batch trade follow them into their holdings if you wanted to, which is kind of interesting. Like copy their portfolio. Yeah, they since their net worth is over $100 million, they have to make all their trades public by SEC law. Pretty interesting. So let's keep going here. Yeah, hey, AMA again. This is a brokerage. Link tree in bio, very first link there. Affiliate, or you can just type it into Google. It's just a broker called Moomoo. But anyway, let's keep going here. Let's see. GoPro. Yo, I feel bad if you own this stock right here. Anyone remember GoPro? Those like cameras. This company is basically high chance of bankruptcy. I mean, that's kind of why this stock is at an all-time low. I mean, wow, this was just wow, a $12 stock. Now it's a dollar. Here's the thing that's so unfortunate. They've seen so much Chinese competition where the Chinese cameras are cheaper and better, and they really are. Um, Look in the top right. You see that market cap? This whole company is only worth 264 million. So remember that as we look at these financials. The whole entire company is worth 260 million. You're buying in at that valuation. You could buy the whole company of GoPro for 260 million dollars. You're buying a business that lost 17 million this quarter. 50 million last quarter. That's 20% of the company. 40 million the quarter before, another 20%. I mean, that's why I think there's a high chance of bankruptcy. They're leveraging up their balance sheet as well. I mean, that's kind of why this one's been struggling. There has been some momentum recently. I do wonder what happened here. I mean, look at that huge candle. But I can't really trust that one just from the losses. So what up, Terry? He said a TMUS stock. Hey, I do own this one. He says, what's going on with T-Mobile? Yeah, let's go to my position real quick. So here again is my Webull account. I have 5 shares of T-Mobile. Full disclosure, I might be biased, and my average cost is at $234 a share. Oh yeah, there were all my little buy orders right there. Nice little dollar cost average. Here's what I love about T-Mobile, by the way. Here's why I think this is a great just buy and never sell stock. Has anyone seen those Ryan Reynolds Mint Mobile ads? I mean, they're genius, but they have a 1.3% dividend yield, so you get a very nice yield. Here's why I think this company might continue to climb back up to all-time highs. The PE is a 23 right now. So this company is trading at 23 times net income. They've been super growthy. Postpaid phone revenues is up 7%. I mean, well, let's see what the total sales are. So yeah, the sales are up by 6.8. All right. So the sales are up by 6, but the net income is up by 10. So that means they're growing their margins a bit. So look at this. Business now has 15% net margins. The margin expansion's been huge. They used to have single digit margins. In 2021, low single digit 4 or 5% net margins. Ever since they won the lawsuit against AT&T, T-Mobile gets permanent access to all of AT&T's bands. And they have been doing some helium work as well. But anyway, they're making $3 billion of net income a quarter. What is T-Mobile doing with $3 billion of net income a quarter? They're literally buying back their own stock like crazy. They spent $2.5 billion this quarter on buybacks, $2.5 billion the quarter before, then another $4 billion. And here's what that does for you as a shareholder. So look at this. The net income's up by 10.1, but the net income per share is up by 14. You own 3% more of the company plus the 1.3% dividend yield. I mean, they're just so shareholder friendly, so growthy, and that's why I think they're a great never sell stock. I want exposure to T-Mobile. Again, not financial advice, but they're pretty cool to me, I think. So someone said CRMD, applesauce, CRMD worth a look, or did I miss it? Let's check it out. So I do have this one on my watch list. So they're just over $1 billion market cap. So check this out right here. So this is the thing I like about them. The revenue's been super growthy. I mean, literally this exact same time last year, the sales were 800,000. Now it's 40 million. I mean, that's incredible growth. And on that 40 million, I don't believe it. They made 20 million in net income. So they have 50% net margins, a fortress of a balance sheet. Yeah, let me re-add this one to the top of the watch list. I can't believe that, bro. The margins are incredible, and that balance sheet is a fortress. It's a medicine company. You know what? I might buy into CRMD. That's crazy, bro. I mean, all right. Thanks for that one. I like that one too, applesauce. So someone said, look at IBIT. Hey, that's basically what Bitcoin is. Yeah, we'll look at Zim. So let's see, IBIT. So this is the iShares Bitcoin Trust. And basically, it does exactly what Bitcoin does, but since it's an ETF, you get SIPC insurance, which is pretty cool for up to 250K. So it's like a Zim integrated. Why did Buffett sell? I have no clue, Clem. I don't know his reasoning, but doesn't bother my analysis. So here is Zim Integrated Shipping. This stock right here basically is a shipping company, overseas shipping. Basically, whenever there's logistics issues, like when they shut down the Red Sea and the Panama Canal or all this stuff right here, this company benefits from that supply chain issue. And this is a huge dividend play because they have a rule, and very rare companies do this, but whenever they make net income, 50% of that net income will be returned to you as a shareholder in a dividend. So whenever they make a bunch of net income, you get a bunch of dividends. But like, look at this year, they didn't make any money for that entire year. So for that whole year, you didn't get paid a dividend. So it's very cyclical. Um, and look at how the dividend changes every year. Like in 2022, it was crazy with all the supply chain issues. You got the share price is $13. They returned $27 in dividends. That's twice their. So they returned, wow, they returned $3 billion in dividends that year. And now the whole company's worth $1.6 billion. I almost wish they retained some of that money and maybe did share buybacks or, bought another business. But anyway, that's a pure dividend play, basically. Yeah, applesauce. CRMD looks like a hidden gem. Another hidden gem I won't talk about because I'm about to make a YouTube video about this one that I'm about to even buy at all-time highs. It's ticker symbol PODD. Very, very cool company right there. Someone in the chat told me about that one. So someone said thoughts on Lucid. So the thing with Lucid is it's hard to trust this company. I don't like if you're looking for if you want a stock to just buy and hold forever, just hope it compounds at 10% a year. Like that's kind of what I hope for most of my stocks. That's what I aim for. Just buy a stock, let it CAGR at 10% or with the S&P 500 a year. This is not one I trust to do that. So here's Lucid. This was the news for them. I would hope be the bottom, but it wasn't. They got a huge order, a $1.3 billion order from Uber. So Uber ordered a boatload of Lucid cars. They rallied up on that news, and after the rally, Lucid decided to issue shares and dilute you. Now the stock is back to all-time lows. So again, look at this market cap. Here's why you can't trust them. They're only worth $6.3 billion. So the whole company's worth $6.3 billion, and you're buying a business that lost 550 mil this quarter. 400 mil the quarter before, 400 mil, a billion. I mean, that's literally that's like 40% of the entire market cap they've lost in net income the past year. So sadly, there's real almost bankruptcy risk at Lucid. And every time the share price goes up, they have to issue shares and dilute you because they have no cash to pay off these net income losses. It's unfortunate. So every time the stock goes up, they dilute. So that's why I like companies that instead of diluting you, they buy back their own shares. So there's less shares that exist every year. So that's my on. Again, I'm not trying to be a hater, but I just can't trust Lucid. It could be a fun little swing trade stock there or something. So yeah, let's see, BYD. You know what? So yeah, let's look at BYD right here. So we just looked at a car company, Lucid. Here's another car company that Warren Buffett owns. This is BYD. They are Chinese, but let me tell you, if we did not have tariffs on these cars, they'd be all over the U.S. They're good and they're cheap. This company makes more net income than Tesla now. If anyone's heard of the BYD, you've probably never seen them because they're not in the U.S., but they make more net income than Tesla. And this is in USD. I mean, they made 1.3 billion just the most recent quarter. For the full year 2024, they made 5.7 billion in net income. You also get a 1.3% yield. Berkshire Hathaway, which is Warren Buffett's company, owns some of them. I wonder why Warren Buffett bought BYD and not Tesla. All right, so you putting your extra cash into the fund. I see. Have a night. Oh yeah, hey, why not, John? So basically, yeah, if you look at them on my screen, I'm not seeing too many good deals with the market being at all-time highs. So I just keep it here, and it earns me daily interest. So why not? That's why I don't mind holding cash right now. But if y'all didn't know, you see how you get a 4% APY. Federal Reserve is going to cut interest rates next month, so this should go under 4% in 30 days when the Federal Reserve cuts interest rates. And same with all the other apps, Webull, Robinhood, their APY is going to go down. And that also forces kind of money to go back into the stocks. You no longer get a high yield on your money market funds. Your high yield savings account no longer gets that high yield. So there's going to be a flood of money back into stocks. Anyway, and that's kind of the thing that sucks about like real estate, the self-fulfilling prophecy. Like you can't buy a house because rates are too high, but whenever they cut interest rates, the price of the house, the valuations go up, they skyrocket. Anyway, let's keep going here. Do you have margin activated? No. Well, I have. I've never used a single dollar of margin in my entire life, so I can't say that. But it's enabled because I want to have a margin account to get the instant deposit bonus. But I've never used margin ever, between all my accounts. So yeah. Is Coca-Cola good? Well, I'm not sure if you're talking about the Coca-Cola Consolidated. This isn't the normal Coca-Cola that people know. This is a very small name. They're only a $10 billion company and only a 0.7% dividend yield. But I think they're going to be a winner. I love that. I've done too much research on them. Someone said another car company to look at is PSNY stock. So let's see. There's another. PSNY stock. Oh, someone asked me a good question. Why am I still holding a stock? I want to answer that after this. But here's Polestar Automotive. So they're only a $3 billion company. So that's not great. So yeah, here's the thing. Here's why you can't buy the car companies like Lucid and like Neo, Rivian, really. They just burn money. I mean, 300 mil, 700 mil. They have more liabilities than assets. I mean, they're just in a bad spot. So look at this. Not only are they losing a couple hundred mil a quarter, the business isn't growing. I mean, the organic sales are down 17%. All for I don't know about that one. So someone asked me, why am I still holding this stock right here? So yeah, if we look at my portfolio right here, I am down 56% on PERI right here. So here's the one reason, and look at that, as you can see, I always recommend if you like a stock and want to buy it, you should DCA. That's where you slowly dollar cost average into it. Instead of spending all your money at once, it's a more disciplined approach. Here's why it's not always smart to keep always DCAing. Again, always do your own research. And here's why I'm not selling this one. Hmm. Here's why I'm not selling this one. Look in the top right, this market cap. The whole company is worth 420 million. So remember that. The whole company is worth 420 million and they have 320 million of cash on hand with no debt whatsoever. So it's a debt-free company, 30 million in cash. So literally 80% of their market cap is just their cash on hand. And the reason their cash just went down so much is because they just bought back how much of their shares? Or how much of hold on. They bought back 4% of I don't know. Anyway, they've been buying back their own stock like crazy. So anyway, I just can't sell them because so much of the market cap is cash on hand. That's kind of my same thesis with like Zoom and UiPath. They're kind of in the same boat. Actually, that's really funny actually. So Zoom and UiPath also have no debt whatsoever. I'm pretty sure 50% of Zoom's market cap is their cash on hand. More like they have 8 billion of cash. The whole company's worth 25 bill. So yeah, this is another reason why I can't sell Zoom. Zoom has $8 billion of cash, no debt. The whole company is worth 24 billion. So basically, if you do an X cash PE, you subtract 8 billion from 24 billion, you're paying $15 billion for a company that prints money, 300 mil plus a quarter. Slow growth, low single digit growth, but they print net income. I just can't sell out of it for that reason, though I'm down 50%. Some companies, though, if I'm down 50% and I see things are terrible, like ChargePoint, like I don't have very many of those losses, thankfully, but I don't think I did that with Fiverr. So, but like ChargePoint, I lost like 3K on that one. I'm so glad I sold. You know what? I like being transparent. I'll be super quick about this. You know what? Here's ChargePoint right here. Let me show you why it's sometimes worth to sell a stock at all-time lows. So here it is today. Here's where I sold it. It was right here. There's the sell order. So I sold all my shares on this day right here. It says 60, and here's where I bought all my shares. Um, should show me the buy orders. Did I? Oh, it's right here. Yeah. So I bought my shares all right here at, look, this is stock split adjusted, but I basically bought my shares at 330 and sold it all at 60. So I took an insane loss on this company. And I'm so glad I sold it right here because it's, way, way, way lower. Anyway, sorry, that kind of worded that weird, but let's keep going here. Someone said UAVS. Let's check it out. So AG Eagle Aerial. Yeah, we don't really cover these kind of stocks on here. So this is a $60 million company. Look at this stock price. So it's a $60 million company at all-time lows. Well, hey, I mean, here's some technical analysis this app is telling me. I like that feature. A bullish continuation wedge. So hey, maybe you could do some technical analysis momentum, but uh, if you're looking for, oh, so look at that. It looks like they're a drone company. 65% of the revenue comes from drones. Do they have any sales? 4 million is sales. Not terrible. Lost 2 million. Losses are narrowing a bit. So I guess that's like a drone and sensors play, but only 4 million of revenue. Uh, I'd pick probably a bigger drone play. So yeah. So let's see. BLDP. BLDP. So Ballard Power Systems. Oh yeah, then we can look at Nvidia. They just reported earnings. Opinion on Rivian. I don't love Rivian. I do own Rivian through Amazon because Amazon's the largest shareholder. But I'm not loving Rivian individually. But here's a. I don't think we should cover this one either. They're at all-time lows. They're only worth 600 mil. Um, and they're losing a lot of money. So this company is losing 20 to 50 million in net income a quarter, and the whole when you're only worth 600 million, losing 20 million of net income is huge. And then 20 mil the quarter before, 50 mil the quarter before, 200 mil that quarter. So we really want to see these losses start to narrow. Yeah, like look at how their balance sheet just declines every quarter because of these net income losses. They only have 735 million of assets. The same time last year was a billion. So we want to see them get close to net income positivity. Wait, what were their sales though? Were the sales growing? That's the whole. So the sales are up 11. At least they're growing, but I'd be super careful with that one. So actually, wait, we actually let's look at Nvidia right here. Then remind me to look at Celsius. I want to look at Celsius stock. So let me pull up Nvidia right here. So I wonder if it'll pull up this right here. Okay, Nvidia stock. I'm actually surprised. They're only down by 1%. I mean, that's a normal day for Nvidia. When we zoom out, you can't even tell that they reported earnings. It just looks like a normal candlestick day for Nvidia. And here's what I love about them. They have a huge GPU market share, 20% PC GPU market share. I will say I watched them report earnings. They originally fell like 3 to 4%. Here's the original reason they fell a little bit. So here's the main reason. The revenue, total sales, this was great, grew by 55. So revenue's up by 55, but the net income is up by, wait. So basically, the, wait, 2026. Oh, wait, hold on. Never mind. Never mind. I'm looking at the wrong thing, so I apologize here. The margins actually did grow. So look at this. The revenue's up 55 and the net income grew by 59. So actually, yeah, their margin grew by 2% year over year. That's great news. 56% net margin. That's actually a new record. Or that's basically at a record net margin. So that's great for Nvidia. Let's see the free cash flow number as well. Yeah, the free cash flow is great. Yeah, they have a fortress of a balance sheet right here. Obviously, we know they have a huge PC GPU market share, 20% PC GPU market share. They have this automotive business where actually Lucid automotive cars use NVIDIA software. And of course, 80% of the revenue just comes from their data center business. Data centers need GPUs, and NVIDIA makes it for themselves. So, hey, it's genius for them to get into that business. And also Nvidia, they're so big, they own all these individual stocks right here like CoreWeave, ARM, APLD, but that's such a small percent of their market cap, of course. So what up, Juan? He said, can we look at Western Union? What is that, WU stock? Um, so let's see. WU. No, hey John, you don't have to do that. No, I was talking about the instant deposit bonus, John. Um, Okay, sorry, my Wi-Fi is just terrible right now. I do apologize. I might have to just switch over to Webull. This ain't gonna work. Let's see. WU. See if it works. But yeah, so it's actually all I have to do is reset that. Hold on. There we go. Every time I read, there we go. Okay, WU. Sorry. That's I've had this app open for basically 2 hours. I'm surprised it's still functioning. So anyway, here's the wait. Can we look at Western Union? Very interesting. Oh yeah, this is that high yielding place. So basically, this company has a crazy yield, an 11% dividend yield. But one thing investors aren't like, if we look at their consumer money transfer business, which is 86% of the business, it's down at 9% year over year. If you look at it on an annual basis, it kind of just trends down single digits every year since 2018. So the business isn't really growing, but the net income still well covers the dividend. The dividend cost their 11% dividend cost exactly 86 million of net income a quarter. And as we can see, they're making over 100 million in net income a quarter. So they cannot, for right now, they can easily afford that 11% yield. So yeah, let's look at CELH right here. This is Celsius Holdings, man. After the Alani acquisition, I mean, this stock has been on fire. I love their drinks too. The pink rosé flavor is really good. But check this out for Celsius. If we go to the shareholders right here, Alani, which they just merged with Celsius, owns 9% of the shares. Check this out. If you're wondering, like, how did the sales just insanely go up 83%? That wasn't organic. That was with the Alani numbers. But yeah, sales are up 83%. This net income was a record net income quarter. Here's one of the reasons that the stock tanked so much from all time. I went from 90 to 20 bucks. It was a terrible time. That's because they were making all this net income every quarter. Then the net income went negative. I mean, no investor expected this huge, this was a major growth stock, and then the growth just went away. It went negative. But now the growth is back. So investors are happy. I believe they also have no net debt. So I got to recheck after the Alani merger. But still, I love Alani. And Alani is a huge growth story. I like them. Let's see. Marvel, please, or MU. Let's look at MU stock. Let's do it. So, oh yeah, Micron Technology right here. So yeah, this is a semiconductor play. They have a nice yield as well. Check, well, a 0.4% yield, not huge, but yeah, this computer networking business has been growing like crazy. Check this out. It is up 97% year over year. So this business is growing very strongly, up double. And look, the total sales, after being up 81% from the previous year, it grew another 36%. So incredible quarter. They made a insane net income. I mean, look at these net income numbers and look compared to last year. I mean, they used to lose over a billion a quarter. Now they're making over a billion a quarter. So everything on MU is headed in the right direction. Ooh, hey, Khan said it. Ticker symbol Dave. Let's do it. I do own this stock, by the way, full transparency. I'll show you my position in this company. I own them in my kind of risk on portfolio right here. They've been one of my better performers. I did take a lot of profit on them. So look at this. I sold my basically 2 shares at 272. I made my money back. Um, I took my original investment off the table. Yeah, I sold it a little bit up here. But anyway, here's why I love Dave, bro. I think they're going to continue to win. You get a 5% plus free cash flow yield even right now. So let me share with you the best parts about Dave right here. So first off, they're super growthy. If we look at just the total revenue, I mean, it's up 65% year over year. Incredible revenue growth. And on that, they made 9 mil of net income. So they're making a bunch of net income now. They're net income positive. They have a really good balance sheet, but it's really this free cash flow. Actually, let me look at the actual FCF number. Yeah, 66 million this quarter, up 160%. I mean, incredible. And they gave good guidance. This stock deserves to be doing this good. I might be biased because I own them, but great financials there. What's the app called? Yeah, hey, by the way, this is a brokerage right here. So where you buy stocks and stuff. If you want to get it, it's in the link tree in my bio. It's that very first link there. Or you can just type it into Google. It's just a broker called Moomoo. But yeah. Someone said, ooh, um, which one should we look at? IXHL. We'll look at IXHL. Then we can look at DSS. Or wait, is this? Yeah, actually, we're not going to look at it. That's a $50 million micro cap. Let's look at DSS. I believe. Oh no, this isn't what. No, this is a $12 million company. Dang, we can't look at either of this. We got to go back to, yeah, we got to go to Meta. I'm sorry I missed that one again. So yeah, here's Meta right here. Let's look at this company. Yeah, great one right here. They deserve to be at an all-time high today. I mean, this is an incredible company, and here's why I think they might just continue to keep on going up. I mean, the valuation of this company, the PE, which is the net income multiple, is only at 27, and this is a Mag 7 company, so that's why I feel like Meta has the ability to really stretch up to like a 30 PE. Look at these active users, though. I mean, this is their daily active users, 3.48 billion. Literally half the world is somehow on a Meta app once a day, and they just print money, bro. This is a $2 trillion company with 40% margins. I mean, the revenue's up 21, so sales are up 20, but the profits, the net income is up by 36. So they're continuing to grow their net margins. I mean, I just love Meta. You also now get a yield of a nice 0.3% yield, only an 8% payout ratio. They have so much room to just, they could 3 to 4x their dividend right now. They just choose not to, and they do a bunch of share buybacks. So, yeah. MARA. So yeah, again, I don't really recommend this kind of stock because this is a Bitcoin mining company. And I've never seen a Bitcoin mining company outperform Bitcoin. I mean, I feel like this has just been a disappoint. I mean, look at this. The stock has been flat since 2020 when Bitcoin's at all-time highs. So yeah, I'd be nothing's really blowing me away there for them. I believe they're just like a Bitcoin mining company, right? So, but it's not just them. Like I think Hive and like or Hive blockchain. Yeah, this one too. It's like they're all. What about CLSK? How's CLSK? These are all the Bitcoin mining companies I remember. Yeah, like even CLSK, same price that it was back in 2020. Hive lower than it was in 2020, and 100% of this company's revenue comes from Bitcoin mining. You just can't buy these kind of stocks, I think. What app are you using? Yeah, hey, by the way, Fort King. This is a broker right here where you buy stocks. If you want to get it, it's in the link tree in my bio, first link. So let's keep going here. Someone said UNH. Actually, let's go. Let me go to the Buffett again. What's cool is we can see these super investors' portfolio. No way, Denise, with the 10 roses, the 10 TikToks. I really appreciate you, Denise. So Warren Buffett actually just bought, it's a new position for him. Warren Buffett just bought 5 million shares of United Healthcare, UNH. So that's actually why the stock has been booming so much. Check this out right here. So this gap up right here was literally just from Warren Buffett disclosing that he had bought a share. And Warren Buffett doesn't buy a stock unless he does a lot of research and he does his due diligence. So that's really interesting. But one thing that is a bit the why the multiple is so low here is because the net income is supposed to collapse on 50% from here. So the PE is a 13. So it's priced in this multiple collapse. I mean, look at this. The EPS used to be $6 a quarter. It's expected to go down to $1.70, which won't be able to afford the dividend, which is tough. But still, I think this one's worth looking into. They have a 3% yield, but I think it's worth looking into, not at over 300 a share. My opinion, Warren Buffett bought his shares at $321, by the way. But in my opinion, I think to get a real margin of safety, I'd wait till under 300. And if you do decide to nibble on them, buy them, you gotta like nibble on the position. Make it a quarter size position. Don't make it a meaningful amount in your portfolio. I don't think they deserve a huge allocation just because there's still a lot of risk there. Yeah, hey Mims, again, I'm on a broker right here where you buy stocks. Linktree in bio, very first link there. So someone said not Fortnite, but this is Fortinet. So this is actually a huge cybersecurity stock that, in my opinion, not financial advice, put this one on your watch list. Yo, Danny Sog, thanks for the 5 roses. Thank you so much, dude. So here's Fortinet right here. It's a huge cybersecurity play, and it's a subscription business. I love subscription model companies, and look at this. Their security subscription is 40% of the business. Check this out right here. Phil, load here. Sorry, my Wi-Fi's a little slow right now. But it literally just hits a new record every quarter. Yo, hey, Diana, no way. Thanks so much for the 4 roses. I really appreciate that. Come on, subscription revenue. So yeah, there it is. Look, it literally just grows 15 to 20% to a new record every year, every quarter. I mean, if I'm going to buy and hold a stock for the long run, this is really what I want to see in a company. And this is all reoccurring revenue as well. And it's not just the security subscription revenue that's growing, but it's the actual profits they're making. I mean, they're literally making 400 to 500 million of net income every quarter. The free cash flow is insane as well. A couple hundred million of free cash flow a quarter as well. So that's one that makes real profits, has a great cybersecurity product, and we're always going to need cybersecurity. Can we see your stocks? Yeah, hey, these are all the stocks that I own in here. By the way, I have multiple portfolios. So, but actually, hey, best way to support me if you want to see every stock that I own, I do stock portfolio updates all the time on my YouTube channel. And my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type in a YouTube Nathan Robert. But yeah, these are all the stocks that I own. And by the way, I'm streaming on there as well. So if you missed anything, you can watch the stream from the YouTube replay. Best way to support me is just subscribe to my YouTube channel. My YouTube channel is again called Nathan Robert. Watch out for people impersonating me. Those are my only 2 accounts. I'll never follow you or DM you or anything. There's like a bunch of people impersonating me. So if you follow me, you might get followed by someone impersonating me. It's not me. So again, thanks so much, Diana. She said IRE in stock. This company deserves to be at this new 52-week high, basically all-time high level. And the financials justify this stock being at an all-time high. So check this out. If we go to IREN's numbers right here, this is why them being at all-time highs is justified. The sales, after going 230% from the previous year, grew another 166% to a new record. So sales went from 54 mil to 144 million in just a year. So high growth of the business, equals high growth of the stock most of the time. And also, it's not just the sales that are growing, but the profits. They made 25 mil this quarter of after-tax net income, 20 mil last quarter. They have a fortress balance sheet. So I completely understand why that stock's at an all-time high. How long do you hold your stocks? For a very long time. In this portfolio specifically, if you look in the top left, it's called my buy and hold portfolio. Once I buy a stock in here, I try not to really ever sell it. I really try and just stick to these stocks for the long run. What's your number one biggest conviction stock? It'd probably be this stock right here, because I put the most amount of money out of any other stock, but it's ticker symbol FIX. I've not taken a single dime of profit on this one. Even though I'm up a bunch, I think they're just going to continue to win. But the stock I bought probably the most recent is Coca-Cola Consolidated. These are all my little buy orders down there. I've been dollar cost averaging into them. But yeah, let's keep going here. So let's see. ONDA. What is ONDA? So, oh yeah, this is the autonomy driving stock right here. So there's a lot of momentum around this name right now. Wonder if there's any news. Ondas Holdings acquires multiple Israeli defense tech companies. That's pretty interesting. Wait. So, okay. Anyway, this stock is up 15% on the day right now. Pretty high momentum. Let's go see what they do again. Yeah, Ondas Autonomous Systems. I think they're autonomous driving company, not sure. But if you look at the analyst expectations, I mean, it's just expected to the revenue is expected to go from 4 mil to 9.8 million. So the growth is very high that's expected here, which is great news. They have a really good balance sheet, just beefed up the balance sheet. Sales are up. So again, they're very small. Right now, the sales are only 6 million. They're expected to hit 9 million in 2 quarters, but I'd still be careful with that one, buying into this one after they're up 14%, but they're interesting. So let's see here. Infotech. Hey, what's the ticker symbol for that one? So someone said UUUU. Yeah, so basically this is a pure uranium play, basically. They're up 4% on the day. If we look at where the revenue comes from, as we can see, 94% of it just comes from uranium. So yeah, and as we know, nuclear reactors are powered by uranium. It's like the splitting of atoms of uranium. Here's how nuclear reactors work. The uranium splits and it just heats up water. It's not that complicated as people think. It just heats up water and it powers a steam engine. So nuclear reactors are basically those huge silos that you see at nuclear reactors are just cooling stations for the water to evaporate. Anyway, let's keep going here. And it's powered by uranium. And there's been a lot of executive orders and stimulus around the nuclear energy industry. And there's been a lot of bad news around solar and wind. Looks like the administration wants nuclear. So someone said MPW, Medical Properties Trust. So this company, I remember these days right here, they were in some shady stuff. They had this tenant that had like 10% of the revenue was with this one tenant. That tenant defaulted on their payment. They couldn't pay their payment anymore. So this company decided to give them a loan and didn't disclose, give them a loan. And basically, they were loaning out money to themselves, so they were in some hot water back here. Here's why I'm still just staying away from this stock. I mean, look at these net income losses right here. And these were part of the issues right here. I mean, because they're a REIT, you technically don't look at net income, but it's still net income losses. I just stay away from this stock right here. It's basically a medical real estate play. They do triple net leases for like a bunch of hospitals. But if I wanted a hospital REIT, ooh, I go is it CTRE? So yeah, Care Trust REIT. This is probably oh wow, they're at all-time highs today. Well, this is really the healthcare play that I love. I'll look at it, you get a so not as high as a yield, but you still get a 4% yield here, and look at how growthy they are. This is the part I don't believe. Hey, look at that. Here they're actually making net income. It's not medical MPW losing that income every quarter, but they're so growthy. And if you notice, look at the margins here. Because they do triple net leases are very high margin, near 100% margin. But a triple net lease play right there for CTRE for senior housing, healthcare, and hospitals. Anyway, let's keep going here. MBOT, please. What's this one? MBOT. So Microbot Medical. So they're only $180 million company. They're at all-time lows. Used to be a $16,000 stock, but because of all the stock splits. Well, let's go analyze them nonetheless. So they're only 180 mil market cap. They're a revenue-less company. So look at that. If we go to revenue, this is from 2015. If there was 2024 data or 2025, it would show it. So this is a revenue-less company. They have no sales. They're losing net income every quarter. Luckily, they have a really good, well, not much assets, but they have 33 million of cash from some sort of issuance of stock and no debt, which is good. But it's a revenue-less company. I'd just be careful with that one. So Viva Systems, thank you. What is that one? Viva. Let me type it in for you. I got you. So Viva. Oh, VEEV. Okay. So yeah, Viva Systems, a pretty interesting stock. So check this out. 85% of the revenue comes from their subscription business. I love subscription model companies. Again, recurring revenue. And it literally just hits a new record every year, every quarter. That's what I love to see. New record every quarter. What are the profits? Yeah, look at that. 200 mil plus a net income a quarter. Incredible profits here. And so they have 25, 30% net margins. Margins are growing, making wow, 900 mil of free cash flow last quarter. So yeah, Viva Systems, I can see why they're doing so good. They're just very growthy. Nice little subscription play there. Tofu says, do you have any AMD stock? And the answer to that is yes, I do. So they're actually my largest holding in here. I'm up 34% on them. They've been so growthy. I didn't even time the bottom. Look at this. AMD fell to 78 bucks and we bought them at 125 and we're still up a nice 36%. That's just because they've been so growthy. So they've been a pretty good winner. It's basically my only semiconductor exposure because look at this. Here's what I love about AMD. First off, you get a huge 17% PC GPU market share with AMD. Look at their client and gaming business. This part is up 69% year over year, so that's up nice. And also the data center business. So as you know, data centers need GPUs, and AMD makes their own GPUs and supplies it for them. And look at these just numbers here, like FCF, which stands for free cash flow. It's a record 1.7 billion of free cash flow this quarter. Revenue's up 31, net income's up 200% to 870 mil. They have a monster balance sheet, no net debt. So for all those reasons, I think they're going to be a winner in the long run. Same with Nvidia. That's kind of two of the same things, but all right. Qubits, SoFi. Yeah, let's look at SoFi. I've not looked at SoFi a single time today. They're up another 4, dude. Man, SoFi is just such a great company. I wish I didn't sell out a lot of my shares in the past, but yeah, they're up 4% on the day. I do own 24 shares of them, so I might be biased, but here's why they deserve to be where they're at today. Here's why they deserve all the hype around them. Look at how growthy they are. So they're a fintech. They have their own banking charter. Look at their financial services right here. It's up 105%. It's literally doubled. This is the kind of growth I want to see. I love this. So the sales are up 105 on the financial services. And look at the lending revenue. That's up 30% year over year. So both main segments of business are growing like crazy. And look at this. The financial services are up 105%. They're 42% of the business now. If we go to 2023 Q4, let's see, what were the financial services back then? Oh, come on. There we go. Yeah, financial services were only 22% of the revenue. Then the technology platform. As today, how's the technology platform business doing? Hey, that's up 15% year over year. But yeah, the financial services has been the real winner. Basically, people are really starting to take SoFi serious. The total sales are up, 40%. And look at this net income. They made 100 mil of net income this quarter. They're making net income every single quarter. So SoFi is a super growthy, very profitable company now. And that's why there's so high momentum. Is SoFi good long term? I think so. I don't. It's tough buying them right here though. Hey, thanks again, Tofu, for the rose. I really appreciate that, Tofu. He says, "What about Palantir? Even though they're down a lot, yeah, I'll check out Palantir. Oh yeah, then we could look at Open Door as well. Remind me to look at Open Door. Um, uh, Open Door is really momentuming right now from the low interest rate environment. Uh, or basically on the chance of a rate cut next month, with that chance being at 90%. So here's Palantir right here. Palantir, this one is insane. I wish I owned this one a long time ago. I'm looking to buy this one, but not at this valuation. Like realistically, I need under $150 a share for me to consider this. But here's why they deserve to be where they're at today, though. They're so growthy, man. Look at their government business. The government loves them. That's 55% of the business, and it's so growthy. Man, sorry, might have to reset the app again. But yeah, the government revenue is up 50% year over year, literally to a new record. So government business is off the chain. A lot of police stations are using it, and the commercial revenue is also at a new record, up 46% year over year. So super growthy. The free cash flow was 530 mil. The net income was 300 mil. The margins are at a record. They have no debt at all. 6 billion of cash. They're just perfect. Everything about them is perfect except the valuation for me. So let's look at Open Door right here. Huge momentum play. So on Friday, Jerome Powell spoke at Jackson Hole and basically confirmed that was on this day right here. Basically, with a 90% chance, confirmed there's going to be a rate cut in less than 30 days. So in 30 days from now, expect interest rates to be lower, and that's kind of why they've been hyping up. What does Open Door do? They really just flip houses. They're not very good at it, but look at this right here. If we go back into a lower interest rate environment, their sales could just absolutely spike. There could be a lot of future growth, if things go back to like this. But the sales have kind of fallen off a cliff. They're only 1.5 billion in the most recent quarter, but they're still losing net income every quarter. But the losses are starting to narrow a bit. I know they're cut it. They just like fired a bunch of staff to cut down on costs, but they're interesting. They're like a high momentum one right now. So here's a cool one. What up, Tom? He said, can we look at Rocket Lab? So yeah, Rocket Lab. This is my favorite space stock. Let's see. There was some cool news. So they just finished acquiring Geost. They just acquired Geost. So the growth is going to be even higher. I would avoid ASTS, Space Mobile. I would avoid Lunar. I would just buy Rocket Lab. This is like the king of the space stocks. I mean, look at their space systems revenue. This is up 67% year over year. It's up 27% year over year. Sorry. And they just acquired Geost. That's going to make this revenue grow even more. It's inorganic growth, but it's still growth. And then also they have their launch services business that was up 59% year over year. They also have a huge backlog. Like they literally have like a $1.5 billion backlog of orders that they haven't fulfilled yet. So the revenue is really good, really growthy, but they're still losing net income every quarter. I'd still watch these net income losses, but it's okay for now with how growthy they are. So yeah. What up, Jumbo? He says CPRT when you can. Let's see if we can pull it up. CPRT. So this is Copart. I've never heard of this company before, but they're a huge one, a $47 billion market cap. Pretty interesting. So I wonder what industry they're in. They're in the specialty business vehicle sellers. Huh. Well, let's see what the actual sales are. So the sales are up by 7.5% year over year. And yeah, they're making 300 to 400 million in net income every quarter. So that's some really good net income numbers. And wow, look at that balance sheet, man. They literally have 4.4 billion of cash, up from 3 billion of cash, and no debt at all. They have an incredible balance sheet. So here's a debt-free company with 4 billion of cash. That's 8% of their market cap because they're worth 47 billion. Yeah, that's like 8% of their entire market cap is just their net cash on hand. Plus, they're making 400 mil a quarter. They're really interesting, actually. They're really interesting. Ooh, what up? Someone said Shopify. Yo, that's a stock owned by Kathy Wood. Let's go over to the Kathy Wood portfolio. Let's see what her latest buys were. She bought, oh yeah, Circle or eToro, Bitmine. What is KMDA? I've never heard of that one. Anywho, one of her main holdings is Shopify. This is 5% of her portfolio. I love Shopify. I used to have a Shopify store. And here's why they're a great investment, in my opinion, not financial advice, but look at how growthy these sales are. I mean, look at that. It literally just hits a new record every year. I mean, in 2019, it was 1.5 billion for the full year. Now it's 8.88 billion. These are some incredible growth numbers. So not only are the sales growing, but the profits are too. This is the free cash flow, 400 mil plus of free cash flow a quarter. Um, Sorry, there we go. They're making, a couple hundred million net income every single quarter as well. So Shopify's just very growthy, growing another 31% year over year. So yeah, they're great. All right, so let's see. Infineon, what is that? Give me the ticker symbol and I can maybe check that one out for you. Hey, Lucky, what's up, man? He said check out TSN. That's actually Tyson Foods. I love their frozen chicken. It's like the best frozen chicken out there. So we do buy their products pretty frequently. But look at the stock right here. The stock has been flat since 2015. So that's unfortunate. Imagine you buy Tyson Foods in 2015. It's the same stock price today. But yeah, look at that. They sell beef, chicken, prepared foods. They're a food play. And they're not growing too much. I mean, the sales are up by 3.9. So we kind of want to see some higher sales growth. But look at these profits right here. They're a bit choppy, but if you kind of average it out here, so this was kind of a one-time adjustment. If you average it out, they're pretty much making about 380, 350 million of net income every single quarter, and you get a nice yield, a 3.55% dividend yield. Let's see how much the dividend cost exactly. So if they make about 350 mil in net income a quarter, let's see the exact cost of the dividend. So the dividend cost 175. Yeah, there you go. It updated at the top there. The dividend cost 175 million of net income a quarter. So yeah, the dividend is safe for now, or it's safe. Very nice. So let's see. These are some interesting names. Yeah, let's look at ASML right here. So this is kind of an NVIDIA. Well, actually, one of their main customers is NVIDIA. They basically sell like the chip making machines, the lithography machines. They only have three customers really. I think it's Samsung, Intel, and NVIDIA. So the main reason though the stock fell on earnings right here is they gave bad guidance. They guided for single digit growth, which isn't great. Single digit growth for the next year. That's why the stock has been flat for a while, despite an insanely good beat on the quarter. This quarter when they reported earnings, they beat on revenue, they beat on net income by a huge margin, and they beat on EBITDA by a huge margin. So then why did the stock go down? It was the guidance that hurt them. But this quarter was great, and I think they're worth looking into. Check this out. The sales were up by 35, but the net income was up by 86. That means they're expanding their net margins. Record margin quarter, 35% net margin. Deleverage your balance sheet a bit. You get a 1% dividend yield. They are European, so you might have to pay some weird ADR fee, but I don't own them, but that's ASML. Hey, what up, Loney? Yeah, we're back. Yes, sir. I'm glad to be back. By the way, my TikTok account, if y'all wondering where I've been, it's been banned the past 3 days from live streaming. So I've been streaming on my second account, my YouTube channel. By the way, best way to support me for y'all on the YouTube stream or the TikTok stream, the very best way to support me, because I sell nothing. I have no course, book, Discord. Is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type in a YouTube Nathan Robert. I'm also streaming on there, so it'd mean a lot if you just watch the stream from over there. Anyway, let's keep going here. Get back to and if you missed anything, if you missed anything, you can replay it on YouTube. The stream stays up forever, so you can watch it live and replay it if you missed anything. The beginning of the streams are really cool. Anyway, so here's COO. I stream every day. So this is a Cooper Companies, COO. Haven't heard of them before. They're a $13 billion company. They haven't been doing too great because they're the same price as they were back in 2018. So Cooper Vision. The sales are up 5% on that business. Let's see, how's the Copper Surgical or Cooper? I keep saying Copper. That's up 8%. So the business is growing mid-single digits. Let's see. So yeah, the sales are up by 6, but the net income is down by 1. So the margins fell a little bit, but not actually, no, it didn't. Technically, they have a really good balance sheet. They're making pretty much 100 million of net income a quarter. What's the multiple on this? The P is a 32. Well, I would just like to see the sales growth be a little bit higher, but that's pretty interesting. Cooper. Yeah. Hey, sir, I'm new here. I'm from India. Hey, very nice to meet you. Hope you're having a great Thursday. CRWV after the Nvidia report. CoreWeave. Yeah, let's go to CoreWeave stock. So, CoreWeave is in the Nvidia portfolio right here. It's literally 85% of their portfolio. So CoreWeave, they did just IPO not too long ago. Very successful IPO, and then they've kind of, as Nvidia bought the dip on CoreWeave. But let me show you their financials right here. There's some good and bad news. So here's the good news: is how growthy they are. The sales literally went from 400 mil to 1.2 bill. That's a 3x increase. So the sales are extremely growthy. That's the main thing about CoreWeave. Extremely good sales growth. These net income losses aren't great though. They're losing a couple hundred mil of net income a quarter, but Nvidia does own a lot of them. And there was some news down here I wanted to cover. CoreWeave Insider sells. What's the weekly brief? Jane Street acquires 5% of CoreWeave. Anyway, they're interesting. Nvidia owns them. What happens is, oh yeah, hey Daniel. By the way, I'm on a brokerage right here where you buy stocks. So if you want, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a broker called Moomoo. So yeah, link tree in bio, first link. It's an affiliate link. Full disclosure. So actually, yeah, if you sign up, we'll both get some free stocks. But let's see here. SoftBank. What's the ticker symbol for that? I don't know what that is. IFX stock. What is this one? IFX. Let's check this one out. Sorry, yeah, again, hey, my Wi-Fi is a little slow right now. I do apologize. But if y'all wanted to follow button, we do go live every day. I might even do another live stream later tonight, for an hour or two. So IFX. So I don't know if you're talking about this one. So that's why I don't. This is a Canadian company worth only $60 million with no volume. I mean, look at the candlesticks there. There's no volume on this company, so I won't really cover this one. Very small, all-time lows. Sales are 5%, or sales are up 5%. So be super careful with that one. Okay, here's a cool one though. This is PSTG. This is Pure Storage. Actually, if I go over to my watch list right here, yeah, Pure Storage. Wow, they're up 31%. I love doing the analysis over here though, because it's the best way to do it. So this stock is at an all-time high today. These are the storage companies that, hold all the data. So let's see, subscription service revenues. Let's see, subscription revenue service is up 18%. Look at that growth. So I love subscription model companies, and check this out. This is what you want to see. I mean, it literally just hits a new record every single quarter. Let's see what the earnings were. So they beat on revenue, they beat on net income, and they beat on EBIT. So they must have given some good guidance too for the stock to go up that significant amount. But yeah, I love the subscription service growth on that company. 70% of the revenue comes from the US. So yeah, congrats if you own that one before today. They're up a massive 30%. So I got the Nvidia stock. Hey, nice, Looney. India has some good emerging. Yeah, here, I think it should link tree in bio there. Here, I'll paste that just in case. But anyway, someone said this is a weird ticker symbol, 9984. I can't really view these ticker symbols, man. This must be a China. Oh, SoftBank Group. Okay. So this is a Japanese company, so that's why the ticker symbol is a number. Look at that. So yeah, SoftBank has been investing in a lot of US companies like Oracle, for example. So they're Japanese, so we're going to convert their revenue to US dollars just to get a better idea. So let's see the net income. So yeah, look at this net income they're making in the past. I mean, $4 billion this quarter. This is the fiscal year for the fiscal year 2025. Basically, for the past 12 months, they made $11 billion of after-tax net income for that year. They pay a dividend. You get a small look at that. I like that. So 0.3% yield, but the payout ratio is very low, only a 5% payout ratio. So that's interesting. Yeah, that's SoftBank Group, Japanese bank that's like investing in a lot of US stuff. So yeah. All right. So yeah, hey, so let's go over this one right here. So, oh, we could look at Robinhood too, but let me look at Progressive Corp. So, yeah, I am down on this position. I'm down 1.5%. But if you're looking for a stock, like if you look at the market right now, a lot of stocks are at all-time highs. Markets at all-time highs, pretty much. Here's a company, PGR, Progressive. It's that insurance company. I believe is maybe worth looking into, even buying right now. You could get it at a lower cost basis than me. I'd keep it as a small percent, small sliver of your portfolio, but I think it's worth getting some exposure to insurance, especially with Progressive specifically. Here's why I like them the most. Look at their personal lines. I mean, it's really what you want to see. I mean, the revenue just hits a new record every year. I mean, just the most recent quarter, it was up 24% year over year to 19 billion. That's the personal lines. They also have then the commercial lines, also at a new record, but that's a smaller segment of the business. But anyway, this is the best part about Progressive, if I'm being honest with you guys. It's the margin expansion. So look at this. The revenue this is very good growth for an insurance company. 21%, very consistent revenue growth. Revenue's up 21, but the profits, the net income's up 100%. They made $3 billion in net income this quarter, $2.5 billion last quarter, $2.5 billion the previous quarter. So they just make so much net income. And guess what the price to net income is? The price to net income is a 13 on this company. So they're trading at 13 times net income. They also pay special dividends. So normally they only pay you 10 cents of dividends a quarter. Here's what's so unique about this company. Every January, they pay you a special dividend. So last January, it was 75 cents as a bonus dividend. The normal dividend's only 10 cents. You'll get back in cash. They did 75 cents. It's kind of like they reward you around Christmas time. It was 75 cents, but this year was $4.50 as a special dividend. And with this insane new record net income quarter, can only guess what it's going to be this next January. So anyway, that kind of incentivizes you. It's an insurance company. Just buy and hold that one forever. No real reason to sell out of Progressive Corp, in my opinion. So yeah, you're right. Yeah, so Nvidia did just report earnings. I won't even cover them again. I'll be quick about this one. But yeah, Nvidia had some very solid earnings. So look at this. Obviously, we know they have a huge GPU market share, 20% PC GPU market share. Lucid uses their automotive business, huge data center play. But yeah, here were the actual numbers versus analyst expectations. They beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat. Here were the actual numbers. So the sales were up by 55. Incredible. Sales were up by 55. The net income was up 59. So they did grow their margins. So 26 billion of net income. That's a record net income quarter. Fortress balance sheet. It's insane free cash flow numbers. So I mean, what other company does 26 billion in net income just this quarter, up 60%? You know, at this time next year, what's the net income going to be? They're just incredible. So why is Progressive Corp down so much? So yeah, look at this one. They are a bit off the all-time high. I think it's just because they're a safety stock, insurance. Like if you look at some other sectors that are similar, like a healthcare stock or like a food name, like a Pepsi, they kind of don't trade at high multiples. So I think it's just because they're a safety stock, they're down. If you look at some of these other stocks as well, like a Pepsi or anyway. But yeah, I think if we go, like if tech sells off, I think Progressive Corp, McDonald's, even Sprouts Farmers Market, these are all great buys. Actually, I think Sprouts Farmers Market is a great buy like now, not financial advice here. Let me show you why I love. If anyone's heard of Sprouts Farmers Market before, it's like a healthy grocery store. If you're looking for we looked at an insurance company. If you're looking for exposure to grocery stores, here's one I really love. This is a healthy grocery store, and they've had a lot of pricing power. People are willing to pay a premium for healthy food, and Americans are trying to be more healthy. Here's what you focus on for grocery stores is the net margin, because Kroger, they literally have 2% net margins. But guess what? Sprouts Farmers Market, look at the net margin expansion they've had. These year-over-year growth rates are nuts. They used to have 3% net margins. Now it's a 6%, up 20%. It was 8% last quarter. So incredible net margin expansion here. So what that does is the sales are up by 17, but the net income, the profits are up by 40%. So anyway, Sprouts Farmers Market is very much impressing me. They also have no debt, basically. I'll show you that right here. So here's their cash. They have $260 million of cash. If you go to their total long-term debt, it's zero. And also, so then what are they doing with all their net income? Here's the best part about them. They're spending so much money buying back their own stock. 80 mil this quarter, 220 mil last quarter. And here's what that does for you. So net income is up by 40, but net income per share is up by 43.6. You own 3.6% more of the company than you did a year ago, thanks to the share buybacks. I love Sprouts Farmers Market. They don't pay a dividend. They're like Walmart, Kroger, huge yields. They don't pay a yield, but they make up for it, returning money to you via more ownership in the business. Uh, what up? Yeah, hey Aaron, what's up? Hey, by the way, I'm on a brokerage right here where you buy stocks. It's in the link tree in my bio. It's the very first link there. Um, it's also, you can just type it into Google. It's just a brokerage called Moomoo, but it's an affiliate link, so I appreciate that. Full disclosure. Someone said RR. So this is Rich Tech Robotics. There's been a lot of momentum around this name. I think they had some deal with NVIDIA. I don't remember. Um, Rich Tech, yeah, so this was kind of the news. Rich Tech Robotics formed a strategic partnership with NVIDIA. So that's good news and all. We hope the future's bright. But for right now, like if you really want a good robotics play, I just out of all the robotic stocks out there, this isn't one that's great, to be honest with you. Like for right now, I mean, this is basically a startup. They have no sales. I mean, the sales were a million this quarter, down 20%. They lose net income every quarter. This company doesn't really have any real IP or patents or anything. So if I wanted a robotics play, I'd go with an SYM, a Symbiotic, or even an Amazon. Amazon's my favorite, then Symbiotic. You know, so that one I don't love, but there's been a lot of great momentum around that name recently. So let's see, GOOG. Yeah, let's look at Google right here. So hey, full disclosure, I do own Google. 19 shares of this stock. Wow, dude, Google just literally hit an all-time high right now. So congrats if you own Google stock. I've been telling people like always since I've started streaming that this is a perfect stock. You just want to buy and never sell. I mean, look at this PE, and the PE stands for net income multiple plus any share buybacks or dilution. But basically, they trade at 22.6 times net income, and this is Google, a Mag 7 stock. So I really feel like they have the ability to stretch up to like a 25 PE, and they own so many great things. They own the Google search business, they own the Google Cloud, they literally own YouTube, they own they own Android in the operating system and the Google Play Store. They collect 30% fees whenever you transact in there, and Waymo and Quantum Chips. They're an ETF in one pretty much, and they're printing net income 20 to 30 bill in net income a quarter. And what are they doing with 20 to 30 bill in net income a quarter? I'll save you the time, but they're spending so much money buying back their own stock. They've bought back. Look at this. Net income's up by 19, but net income per share is up by 22.2. So that means they've bought back a lot of their own stock. So yeah. Um, all right. So let's see. How to start trading? I like the very basics. Don't have it. Yeah, hey, you just get a brokerage, and I would just buy the S&P 500. Again, if you want to buy stocks, like I on this shit, we don't you should, in my opinion, I stay away from the meme stocks, the very small micro caps, the startups with no revenue, the ones that are losing a bunch of money. I don't do options. I don't do crypto. Mainly just buy and hold great high quality companies that I've heard of before, like Amazon, Coca-Cola, in this portfolio, like Google, Meta, McDonald's. I mean, United Rentals, all companies I love. So invest in what you know. Or best thing to buy is just the VOO, which is the S&P 500, best best basically ETF out there, which is ticker symbol VOO, lowest expense ratio way to get exposure really. Um, and it breaks your money up into the top 500 companies. Like here's the VOO right here. It's at an all-time high today. So it's kind of tough buying it right now, but it breaks your money up for you into Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Berkshire Hathaway, Tesla, all the top 500 companies in the U.S. by market cap. Sprouts Farmers Market is amazing. Yeah, hey Dad, nice to meet you. So yeah, any since are buying at all-time highs, it's tough. But I'm being careful. Like with on a normal month, when let's say I get paid $100, I normally invest all 100, but right now I'm like retaining most of it. Like I'll invest 50, and then that's why I have a lot of cash in the middle of my screen right here. At least, though, good news is since I have cash on hand, at least I earn daily interest on it, make 11 cents a day. Basically, a cool little dividend. Mm. All right, so all right. VOO and chill. Yeah. Hey, what up, Ed Music? All right. So, do you own Tesla? I actually do not own Tesla, but you know what? We can cover Tesla stock for you. Um, let's do it. So if we judge Tesla, yeah, hey, by the way, yeah, I see people, yeah, Shadows and other. This is a brokerage right here where you buy stocks. Again, if you want to get this app, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. And a cool thing they just added, like you can track all the super investors, like Nancy Pelosi and her portfolio. You can like batch trade, follow it and stuff. But yeah, affiliate link, full disclosure. So if you sign up, we'll both get some stocks. But or you can just type it into Google. Just a brokerage called Moomoo. But yeah, let's look at a Tesla right here. So here's some actually let's look at all the cool tools we get when we analyze Tesla on this app right here. Like we can see their total vehicles delivered, that's down by 14% year over year. So that's the tough part. When we go to Tesla's multiple right here, Tesla trades at 200 times net income. It's okay to have a high valuation as long as you're high growth. And Tesla unfortunately just lost the growth. So the total vehicles delivered are down by 14%, deliveries by model. But yeah, we can mainly see that in the automotive segment here, which is not 88% of the business. It fell by 12% year over year. So the automotive business is down by 12 and the energy generation business is down by 7. So it's tough paying 200 times net income for a business that kind of just lost its growth. Total sales are down 11. They did a little net income gap trick here. They didn't actually make 1.2 bill of net income. They actually made 800 mil of net income. So the margins are falling at a faster pace than the net income. So Tesla's in a tough spot, I believe. And I get a lot of the market cap comes from the growth in the future of the robo-taxi network and the robotics they might have, but I personally just can't pay that valuation. Yeah, hey Ace, link tree in bio, very first link there. It's a brokerage where you buy stocks. Sorry. All right, so link tree in bio, first link there, brokerage called Memo. So what's better, VOO or VTI? VTI is international, so I would just pick VOO. Both are great. Both are should perform very similarly. So someone is this even a real ticker symbol? Someone said ticker symbol TV. So yeah, this stock is lower than it was in the year 1997. So you bought this stock in 1997, you're down by 50% on your position. It's very unfortunate. So let's see what they do. So they're a 1.5 billion-dollar company. They're a Mexican, or they're on the Mexican exchange. So they're not even a U.S. company. So you got to pay some ADR fees. So they're a cable business, and I can almost guess how the growth looks here. So yeah, business really isn't growing. Uh, yeah, look at these sales declines. I mean, it's tough. So it's just not. It's a cable business, not really a great one. Honestly, I still own. If you want a TV business as a safer play, I would pick Disney, and I do own them, so I might be biased, but I have 15 shares at Disney. All right, so let's see. K Web, what up, Suave? Um, how do you do your taxes? Hey, that's the cool thing. He says, how do you do your taxes with 3 brokerages? You know, the brokerages just send you an already filled out 1099 form. So people say, why do you have so many brokerages? There's no like tax burden. It's just an extra filled out sheet of paper you just hand over. It's super easy. Anyway, what was the stock I want to look at? KWEB. So this is the China ETF. So Tencent should be the top holding in here. Yep. Tencent, Alibaba, Pinduoduo, which is Timu. So your biggest gaming, because so here you have Riot Games, the gaming company. You got this company also owns Supercell, Riot Games, PUBG. 50% of Fortnite is under Tencent. Then you got Alibaba, which owns AliExpress. Then you got Pinduoduo, which is Timu, JD e-commerce. Anyway, if I was going to get exposure to China, I would pick and choose. I would literally probably just pick these top three, or some those top 3 stocks, and just leave out all the others. The others are kind of junk. And I only own one Chinese stock, and that's also been a monster performer. FUTU stock, pretty close to all-time highs, and they just started doing these special dividends. So actually, if you want to see more about this stock, I call them the next Robin Hood. Check out my most recent YouTube video. I just made a whole video about them. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But just type into YouTube Nathan Robert. You can read about them. Yeah, Ken said, what broker do you use for beginners? Yeah, hey, Ken, my favorite one is in the link tree in my bio, the very first link there. It's the one I'm on right here. So it's my favorite one, lowest fee, best free analysis tools. It's the best one in my opinion. Not financial advice, of course. But yeah, and I use all these other ones. I have a Robinhood account. I have a Webull account as well, and own stocks in both of those. But if I was just starting from the beginning, I would get this one right here. And if you want to use my affiliate link, it's in the link tree in my bio. You can just type into Google. It's just a broker called Moomoo. Anyway, let's keep going here. Someone said, Milan said Snowflake. This is like Palantir's biggest competitor right here, and they just reported earnings. Wow, look at that candlestick. They're up 21%. Let's see what they reported. So nice beat on revenue. Wow. So the orange line is kind of what the analysts were expecting there. So revenue's up, or revenue beat, net income beat, and the EBITDA beat. This EPS beat is really the main winner here, because the main thing that Snowflake struggles with is burning through money. Look at this. They're losing 400 million in net income a quarter. It's tough buying this, but they're narrowing the losses at a faster rate than what the analysts expected, and maybe that's why the stock's up 21%. The revenue just hits a new record every year, every quarter. If we go to their product revenue right here, look at this. Literally, if I zoom out, it just hits a new record every year, every quarter. So super growthy, and losses are narrowing there. That's good news. So opinions on LTRX. Is Snowflake and SoFi worth getting into? I think SoFi is a great one, but not at this valuation. So here is LTRX. This is Lantronix, a very small one, $170 million company. And basically 40 million of that market cap came just today. They're up 25%. So there must have been some good news today. I wonder what it is. They reported earnings. Okay, so let's see what the actual numbers were. That's interesting. So they beat on revenue, beat on net income, beat on EBIT. Interesting. They're an Internet of Things. Again, so yeah, that's tough. Look, the sales are down 30% year over year. They're losing net income now. The assets just go down every quarter. I would still be careful with this one. But maybe there was some great news today for them to be up 24%. Or maybe, good guidance that they gave or something. I'm signing up for, basic. Just the basic. This doesn't cost anything. There's no pro. By the way, I have a tutorial on if you go to my YouTube channel on Nathan Robert, it's also in the link tree in my bio. It's like the 5th link there. I have a tutorial on how to use this app and sign up for it and everything. And I also have a tutorial on how to sign up for this app right here, or a YouTube video on how to sign up, and for this one right here. So if you want to check that out. By the way, I'm also streaming on YouTube. Best way to support me is watch the stream from YouTube. Just subscribe to my YouTube channel. My YouTube channel is just called Nathan Robert. You can type that in, or you can go to the link tree in my bio. It's there too. So Waymo's better taxi service. They're more expanded than Tesla's thing. What is ADR tax? Yeah, that's for owning a foreign company, because GRMN. Wait, this is Garmin right here. So yeah, and they have their own different like tax rules too. So here's Garmin. This is a huge company. Wow, $50 billion company, and the stock is at an all-time high today. So really good. Wow, so look at that. So the stock's at all-time highs. Here's what they do. They're in fitness, outdoor, marine, aviation, auto, original equipment manufacturing. That business is up 15%. Why is there so much growth on this business right here? Geez, well, let me look that on an annual basis. Yeah, that's only 9% of the revenue. So it looks like this is just a very growthy company. So sales are up 20% year over year, and net income's up 33%. So they're expanding their net margins. That's great news. I can see why they're at an all-time high today. They have great financials. Yeah, nice win there, Looney. Any undervalued stocks for yourself? Yeah, basically there's not much right now, but there's two. I'm buying Coca-Cola. There's all my buys right here. But yeah, Coca-Cola Consolidated, ticker symbol COKE. It's not the main Coca-Cola company you think it is. It's the bottler. Progressive Corp is my next value play that I think is a good deal right now, worth having exposure to. And then finally, there's one more that I think is a good one, and I'm probably going to make a YouTube video about this soon, is Sprouts Farmers Market. This is a really great grocery store. I just went over them like 10 minutes ago if you want to rewind and check that out. But yeah, that's a great one. We'll look at a few more stocks here, then I got to run. Really appreciate you being here. By the way, if you want to hit the follow button, we go live every day. So someone said CCL, Carnival Cruise Line. And look at this app right here. It's telling us that there's, what is this right here? A triple bottom. Technical analysis. It says the rise probability is an 84% chance. Looks like it's right so far. But basically, this is a cruise line. I don't love the airlines and the cruise lines. To be honest with you, I don't expect these to really outperform the market in the long run. They get smoked in a recession. That's why this one's down bad from 2019. COVID ruined them. But they're finally recovering. They're the highest they've been since COVID. So that's very interesting. I guess travel boom is back. Let's see some of their stats here. Occupancy rate, 104. That's great. Let's just go to the profits here. So I'm kind of seeing this with Royal Caribbean as well. This company is like extremely profitable now. If we zoom out, 2022, look at this. They lose net income every quarter, over $1 billion to $2 billion in net income a quarter. Well, now here's a company you're buying that's making billions every year. 600 mil this quarter, 1.7 bill that quarter, 400 mil. So great numbers here on Carnival Cruise Line. So I can see why they're at this new 52-week high level right there. Yeah, hey, buy SHA or SHA. Again, yeah, if you want to get this little brokerage I'm on, it's where it's an app where you buy stocks and stuff. It's in the link tree in my bio. It's that very first link there. So let's see. Thoughts on HIMSS. Let's do it. So this is that healthcare company. And unfortunately, this one has been struggling ever since they lost their partnership with Novo Nordisk and Ozempic. So basically, this company used to sell a weight loss prescription on their website. And that weight loss prescription led to a bunch of the growth of their sales. And now they no longer sell that weight loss prescription. So that's going to hurt their future growth. But for right now, the business is booming. Check this out right here. Specifically, the sales growth is incredible and the profitability. So look at this. They're making a bunch of net income every quarter. 40 mil this quarter, 50 mil last quarter. Basically, they're going to be making 200 mil plus of net income a year. But the best part is how growthy the sales have been. I mean, it's up 73% year over year to a new record. Just insane growth. So, but one of the reasons, again, the stock has fallen is because of the uncertainty of the future growth. But also, if you're wondering what happened to their balance sheet, they basically issued $1 billion of debt to raise $1 billion of cash, and the two rise together. So the liabilities rise with the assets. It's actually no big deal. So if you go to their cash on hand, that's kind of why the cash went from 270 mil to 1.12 billion. They're basically saying, oh my goodness, not AFK. Dude, TikTok just made me fill out a puzzle to prove I'm not AFK. All right. Why would a live streaming service do that, bro? Okay. But yeah, best way to support me is subscribe to my YouTube channel called Nathan Robert. Anyway, yeah, so that was HIMSS. They're able to take out debt now and get a better return on it than what they expect. All right, so someone said FET. What's this one? FET, Forum Energy Technologies. So haven't heard of this stock before. Yikes. So they're very small, so they're only worth $300 million. They have been doing pretty good recently. So drilling and completions, artificial lift and downhole. That don't repeat what I just said there. But let's see how they're doing financially. So again, these oil and gas stocks tend to trade at low multiples, but have high yields. They did make net income this quarter, so they made 7 mil this quarter, $1 million last quarter, but lost 100 million that one quarter. And the sales are down by 3%, probably just from the price of crude and oil is down a bit. But yeah, sales are down by 3, but they did make net income. Oh, actually, so they're technically making net income every quarter on operating profit. So they're having some weird one-time adjustments to their actual GAAP net income. Anyway, it just looks like a very small oil and gas play. I'd be super careful. Only 300 mil. Bit risky. So Sir Peanut, what's up, dude? He said AD in stock. What's that one? So Advent Technology. So, oh yeah, we're not even going to cover this one. So yeah, if you look in the top right, the whole company is worth 13 million. So I don't really like to cover those extreme micro caps. Let's see. Someone said Roblox. You know what? That's in the Kathy Wood portfolio. So if we go to Kathy Wood's portfolio right here, again, these are super investors. You can see like all of their recent purchases. She just bought a bunch of PagerDuty and Guardant Health, but one of the stocks that she owns a bunch of is Roblox. It's her second largest holding, or 5.75% of the portfolio. And check this out. Here's why this one's kind of been doing so good recently. This is a cool stat we get. This is their daily active users. So if we look at this a year ago, the daily active users were only 79 million. Now, this same time this year, there are 111 million daily active users. So that's a lot of active users. One thing you still got to be careful with are these net income losses. They have so much stock-based compensation that they're able to make a couple hundred mil of free cash every quarter, but they lose 300 mil of net income a quarter because they pay their employees with hundreds of millions of stock. So that's the one thing I don't like. They are a bit leveraged as well, but it kind of doesn't matter because of how growthy they've been. Before I really like consider this one, they really need to, at a fast rate, narrow those losses. Those are huge. So yeah. Um, can you summarize your thoughts on TV? My network broke when you spoke about it. Yeah, hey, JLLR TV stock. This is just a cable business, kind of like Disney's TV business or like a Skydance, but it's just not a one that like it just declines every year from now. It's not a company that you'd really want to trust to outperform the S&P 500 in the long run. Like you're better off buying the S&P 500 at all-time highs right now than buying that, in my opinion. Yeah, hey, Justin, again, I'm on a brokerage right here where you buy stocks. If you want to get it, it's in the link tree in my bio, the very first link there. So, hey, what up, Bogdan? He said OKTA. So let's do it. So Okta, this is a software company, and for my college, we actually use the Okta software. It's like powered by it. So let's see how they're doing though. Unfortunately, their stock looks like a PayPal. Their stock looks like a DocuSign, where they had a huge rally in 2021, and then they haven't really recovered since. But the funny thing is, just like DocuSign, this company's the most profitable they've ever been, but they're nowhere near all-time highs, despite being the financials in the best spot that they've ever been in. So the sales are up by 12%. Not terrible. Sales are up by 12, and look at this net income. Like this company used to lose a couple hundred million net income a quarter, but now they're actually making net income every quarter, and they're going to continue to keep making net income every quarter. So that's what I like about Okta. So I think they're worth holding, but I they just kind of remind me like DocuSign. Like DocuSign too. Like, look, they're down bad from 2021. Some of these software names just get stuck for a while, so it could be a tough hold. Thoughts on Uranium Energy Corps? What's the ticker symbol for that? Bitfarms, is that BITF? What up, Premium? So this is a Bitcoin mining company. Here's the thing I found: like these Bitcoin mining companies, Marathon. Yeah, look, 100% of this company's revenue comes from cryptocurrency mining. Um, Bitfarms, Hivestack, ClearSpark, Marathon. They all look like this. They're all lower than they were in 2020 and 2021. They don't outperform Bitcoin, and I don't really see the value in these too much because they just don't keep up with Bitcoin. Owning Bitcoin would have been an an immensely better purchase than any of those Bitcoin mining companies. So it's weird that the mining companies always underperform the actual asset so far. So let's look at a few more here. BE, is that Boeing? No, this is Bloom Energy. Oh, look at that. They're at an all-time high today. So that's incredible. I wonder if there's any like specific reason. Let's go look at the financials. So the sales are up by 20. The net income losses are narrowing. That's great news. Deleveraging might just be like things are headed in the right direction. Maybe they gave some good guidance, but yeah, the stock's doing great. Someone said, "What's your thoughts on MSTY?" Here's the unfortunate part about this thing right here. So this is a covered call ETF, and basically, yeah, it just hit an all-time low today. So if you've ever bought this ETF, you're down in your position, or in terms of the actual price of one share. So the actual price of this stock, whatever, is at an all-time low today. Very unfortunate. And whenever the price of an asset goes down, it artificially makes the yield look higher. So when we look at this dividend yield, it's actually not this high because the payouts are about to get slashed. But it's 177% dividend yield that they pay monthly. Basically, you buy it to maximize your dividend income. I don't really expect this to outperform the market or even outperform MicroStrategy. So it's tough to buy that. You just buy it to maximize your income. Ooh, thoughts on Fubo? I don't want to cover the thing with Fubo is there's limited upside. Disney already has the ownership. Disney already owns 80% of the shares. The stock can't go really back over this $5.50 level. So there's a capped upside. And if it weren't for the Disney deal, okay, I'm going to judge Fubo off their financials as if they were never bought by Disney. So first off, full disclosure, I own Disney. So I do technically own them via my Disney position. I got 15 shares of Disney. But if we go and judge Fubo for their financials right now, they're not good actually. Oh man, dude, my Wi-Fi might not load this because it's good thing I'm at the 2 hour and 30 minute mark of the stream, man. Bro, really? Okay, there we go. So yeah, if we go to Fubo TV right here, they kind of lost their growth. I mean, look at this. The sales are actually down year over year. So sales are down by 3%. So they actually had some subscriber loss. So anywho, I don't see much value into Fubo besides just some like momentum swing trade, but yeah, that's just my honest thoughts. I mean, money could still definitely be made there. Ooh, someone said Roku. Yeah, actually, let me go back to the Kathy Wood portfolio real quick. So, yeah, if we go to Kathy Wood's portfolio, um, oh, it might not work. CEG, yo, I love CEG. So, yeah, if we go to Kathy Wood's portfolio again, 5.6% of her portfolio is in Roku. And as you know, Roku, they sell you TVs for near break even. So they sell you the TV for break even, and then they make money on the subscription software. So, they just also had a huge advertising partnership with Amazon. So you can like click something on the Roku ad and it takes you like straight to Amazon or something. But anyway, they have a crazy amount of streaming hours. Look, this is the main thing I love. Their ARPU, which stands for average revenue per user, is $41.49 a year per user. Pretty crazy. Sales are up 15, and they're just now getting net income positive. I mean, look at these year over year narrow of the net income. They're losing 50% less net income than the previous year, and they actually made net income this quarter. And look at this free cash flow growth. So Roku's in an interesting spot. Destroyer said what happens is, yeah, hey, Destroyer, this is a brokerage right here, again, where you buy stocks. If you want to get this little app upon, it's my favorite one. It's in the link tree in my bio. It's that first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. But yeah. Let's see. Regeneron. So yeah, there's a story behind this one. This is Regeneron. The reason the stock tanked so much, it went from 1,200 to literally $500. It fell in half, over half, because someone infringed on their patents. They own this eye product called Isla, and someone else made their exact same product using their patent, and the courts basically said they didn't infringe the patent, and it's like no longer void. So something like that, they're in some shenanigans. So if we look at the Isla product, it's down 38% year over year. That's mainly because they're selling this higher dose version called Isla HD. So this has kind of been the growth driver of the business recently. Oh, can we pull that up? Yeah, look at this one. It's at a new record. They just made this one. It was 42 mil. Now it's 400 mil. So I honestly think this company is worth looking into because they're still making literally $1 billion in net income a quarter. If you average it out here, they're making $1 billion of net income a quarter. They're doing insane share buybacks. They have bought back 1, 2, 3, 4, 5, 6. They've bought back 6.5% of all the shares just in 1 year. So if you bought the stock a year ago, or if you just bought, you own 6.4% more of the stock and ownership in the company than you did 1 year ago, thanks to their share buybacks. And they also traded a 14 PE, low multiple just because of the future uncertainty. Also, the dividend is a 0.3. Oh, wait, actually, the Morningstar research. I wonder if it'll actually show this. Ooh, so look at this. Here is kind of the news. I love this. So this is the Morningstar research. Uh-oh. My Wi-Fi just go out? That's not good if it did. Okay, hopefully we're back. My Wi-Fi just had a huge red spike. We're good. Okay. I'll be really quick about this and I'll probably end the stream. So here's what's cool. We on this app as well, you get the Morningstar research. It tells you what the bulls say and also the bears say. And here's what the bears say. The application for US approval of Isla HD, but it was rejected in April 2025. So that was the news or something like that. Anywho, I will just we'll just kind of end it there. So, for y'all, on here. I really appreciate you. I hope you have a great rest of your day. Don't forget to drop a like before you go. And also, best way to support me for y'all on the TikTok stream, subscribe to my YouTube channel. You can replay the stream. The very beginning of the stream is really fun. So if you go to my YouTube channel, just type into YouTube Nathan Robert, or if you go to the link tree in my bio, my YouTube channel is also linked there. So yeah, that's the best way to support me. I sell nothing. I have no course, book, Discord. The only thing I have is a YouTube channel. So that's the best way to support me. Anyway, I hope you have a great rest of your day. We're going to be live tomorrow. Make sure if you want, hit the follow button. We go live every day. Also, watch out for people impersonating me. Which investment app is this? Yeah, hey, Ace, by the way, yeah. Again, this app right here, I'm on a brokerage right here where you buy stock. It's my favorite app. Lowest fee brokerage, most useful tool. It's in the link tree in my bio. The very first link there if you want to get this app where you buy stocks on. It's my favorite one. It is an affiliate link, so if you sign up, it's actually free, but if you want to use it as a brokerage and deposit $100, we'll both get some free stock. So anyway, see you later. Have a great rest of your day. It's an affiliate link, or you can just type it into Google. It's just a brokerage called Moomoo. See ya. Have a great day. And thank you so much for y'all on the YouTube stream. Y'all are the best in trying to build up the channel. Don't forget to drop a like on the stream before you